Good morning, everyone. This is Rose. Today is January 12th, Friday morning. Just doing a quick audio and video check. Okay. Sorry, got distracted there for a minute. Okay. So I will be on till noon, and then Brad Wolf will join us and end the week. So he will take over noon to close. I'm not sure if he's going to come in noon sharp, so because it's lunchtime, so allow some time to the streamers to take a break, but he will be back on after me. So, all right, so let's talk about what is happening on the daily chart first. Let me add some data on this. All right, so we're extremely close to the December 28 high, but really the March high, which is, I don't have it on here, but let me see if I can add. Hopefully it won't slow down. I'll try to do 500 bars. So market has a nice breakout test area from here, so we just reversed back up. Very bullish. So the bulls are not letting go. They're trying to have another high. If we get to the December high, and then, so this is not loading all that well, but, yeah, I mean, this is the high that I'm talking about. So we're not all that far away. And if we can actually pass through the December high, March high, I mean, it's only about maybe 20 points or less, I guess, but let me find out. So that's 40, and that's, yeah, about 24 points, and that's really is nothing. And the market could, get there. So that would give us a 1, 2, 3 wedge top or double top with the March high. And that's what the bears want. That puts us in a really large trading range there. And you can see the trading range is probably going to disappoint the bulls as they're aware that probably sellers waiting there. But we do have a ginormous cup and handle situation and another cup and another handle. If the bears see is some kind of a failure here, getting above this trend line with strong break, or here is another one. We already have a wedge top there. And if we can break this, but the bears see some kind of weakness, they want to double top from the highs and they want to start selling. There's nothing strong about bears here. And you can see we have 1, 2, 3, 4 strong bull days in a tight bull channel. We dipped, but that ended up becoming a cup and handle, and it's trying to get a breakout. Here is all-time high. We can even get to the all-time high. So I think we should be careful about selling anything as market is trying to test the December 28 high and above. But if we start to see some bear pressure, that's a whole different situation, because we could get that double top neckline, and then bears can target this area and then this gap area and perhaps the September 1st high area. So December 20 bar is that bear bar created a strong selling, but it looked like a strong selling by 1 bar, but we got quickly rejected that. But that bar alone creates a interest for bears to come back and test its low, which we have already accomplished, but that puts us into a trading range. So bulls need to break this trading range. So here's what I like to see bulls do, since this is bullish. So we slightly went above it, but didn't close the bull bar. and then we came down and closed. So here is the neckline. So let me do a better job there. So here's the neckline. We're probably gonna go and then perhaps come down a little bit and then make a higher low and then break out. That could reach the all-time highs, maybe even make new highs. But problem here is that this breakout wasn't all that strong at all. But it was the first breakout after going sideways, goes up, comes down, market is bullish. So even if we go sideways today and not get a breakout or come down a little bit towards that apex, next week we could still get that bullish breakout as long as that apex or that trading range, mid-range line holds it and the bulls keep the market above that, and we would get a pullback, trap, and go long. So market is bullish, and you can see there's nothing here that tells me that the bears want to sell. And in fact, today, I think market wants to definitely go test the 40 to 45 area at the minimum. I'm going to try to lighten up this now. So you want kill my resources. Hourly here is we have is a breakout from the last week's range. So here's Monday, Tuesday, Wednesday, Thursday, and Friday hasn't started yet. This is RTH. And I came back and used this area. Is almost 33% pullback inside. And then went right back up. But that puts us into a trading range now. We got 1, 2, 3 wedge top and a double top. Or you could say 1, 2, and 3. And we are in the process of making a double top. But this is a trading range, except it's actually a bull flag, expanding triangle. So think of this as a straight line. We could come down, but if it holds, we could easily buy that pullback and go and test these highs. So we do have a wedge top. It's possible double top we might be forming with a neckline. If the bulls have a hard time breaking out, and it's most likely that's what's going to happen, because this is a one big trading range, we could start to come down to the midpoint of this larger trading range area, okay? And then we could still go right back up. So we could actually squeeze the bears out of this trading range sometime next week. So we are in a trading range. This move down doesn't make it any easy for bulls. They're targeting the highs. So that's why I said 48, 40, 48, 45, or 46 area we might actually test, and then trap the bulls trying to break out, because trading ranges can fail 80% of the time to break out and then come back down. I'm going to look to see if market goes up, comes back down, okay? Just like yesterday, we trapped the bears, and then we started to buy. If that happens, that's great, but if we start to move down with strong bear bars, that means we get that imbalance. This squeeze fails, and then we start to sell into these lows. So watch out for that. If the bear trap does not work at and below the EMA, you'll kind of get the signs of a lower high with strong bear bars closing after the trap underneath the EMA, but failure to get a breakout, meaning failure to get strong bull bars, like yesterday on the 5-minute chart. Then you're going to look for a double top, lower high, and then you can sell into these lows. So far, it's bullish. The market is trying to get to these highs, 48.40, 48.45 area. Globex range here, it's not all that large, only 30 points, so it could double up very quickly. You got a cup, you got another cup, and you got a bull flag. To me, this is a bull flag, by the way. Sometimes flag channel can dip and make it low but chances are this is a bull flag and it has gotten a double bottom higher low and it's trying to target these highs and go higher. It's part of the, and there's a bigger flag here. 1, 2, 3 is, or 1 is 2, 3, and 4 is, or 1, 2, and 3. Doesn't matter how you count it. And then you have a higher low. So we could break out. However, sometimes when you get these deep pullbacks, market goes up, makes a wedge top, and it fails and traps and starts to swing back down. And that's what I'm worried about. So we could still get back up here, maybe these highs, but we could get a rejection. We could swing back down as well. Today's Friday. So the high of the January, low of January, last month's high, low, midpoint of the month. These are all important levels. Let's take a look at January. So January started here. January low, January high. Better if I have actually a little bit more. Here we go. So let's find the midpoint of the, oh, that's December, sorry. That's December high. Where's my January high? Right there. Okay. That's also yesterday's high. So I don't really need it. Way too thicker than I expected to be. It should be better. Okay. All right, yesterday is we have a trend from the open and a failure at the prior day's high, which was bar 68. And immediately we had a strong, a really nice sell signal bar. You could have sold one tick underneath that because it's a trading range. You want to sell under small bars. And better if they're actually bear bars, such as 2. And you get a really nice third bar here, but market is probably targeting the close of yesterday, wants to close that gap a little bit. Then you get an imbalance. So you now have a measured move target, 4 bar, and 1, 2, 3. So you can, I went over this yesterday. So that's your measured move target. But at this point, we're closing more bear bars, so we are in a stop order market, and the market continues to come down. That's 2 to 1. Ended up going 3.5, I think. But see, that's 3.5. But look what happened at the 3.5. We don't have 2 consecutive bear bars closing below. Here's 1, but where's the second bar? So the bears try to close beyond 3.5 and get to the 4R, but they failed. No follow through. You have a wedge here, 1, 2, 3. 1, 2, and 3. So, or you can say small inverse head and shoulders with higher low swing setup. You get a bull flag right here. And then look for another at least 2 bull flags after this one once we get above EMA. Here's what I look for, what's happening here. Once we get above the EMA, I look for a first touch, I look for a second touch, or you can count this as a 1. As this goes, we're probably going to go up 1 more, and then we start to come down. So I look for a minimum 3 bounces from the EMA, okay? Before I look for any kind of exhaustion. Now, let me see if I can actually show you what I mean. Here we go. I'm looking for market to be underneath the EMA. So I'm looking for market to get above the EMA. I'm looking for about minimum 3 touches and bounce. Look, we just about touched bounce, another one, but every time we come back, okay, either to the EMA or the 200 EMA, we're not able to make new highs, and the market goes sideways. Well, it doesn't really help. It's in Asia. Asia always goes sideways, but here's another one. So we're coming from under, right? 20 EMA is above 200, so the market is bullish. Here's the first touch, second touch, third touch, bounces. Then you look for a reversal back. And same thing for the opposite side, right? First touch from underneath, sell. Second touch, don't be fooled by these bull bars. It's going to want to come down for the third time. Comes down for the third time, touches, that's exhaustion right there. Once we start to get above EMA with strong bull bars, you can buy as early as here. Now count for 3 touches, maybe 4 for exhaustion, and then reversal back down. You want to see a gap up before you look for exhaustion. We get above the EMA. Here's your first bounce. Here's your second. Here's your third or fourth. Here's your first. Here's your second. But it's really, I would not count this as a bounce because you're not really above the EMA, but you are now. So this is your second bounce. Pull back is, here's your third. So, and then we extend out. That means exhaustion coming. Don't expect follow through. Look for a couple of deep legs. Pull back into a trading range. That's where you swing. And you're looking for 1 is, and 2. If we don't get the third one and we get above, then you're going to start counting for bulls. 1, 2, 3, and here's 4. Okay, we're getting a little bit more, or you can say this whole thing is 2, 3, 4, exhaustion, and then comes down. But again, things are different in these after hours session. I like to count 3 to 4 max in the US session. Okay, so here's like sample here. We move underneath. Here's your first bounce. Always tries to get above the EMA. People buy and then they get trapped. Then here is second bounce, third bounce. Finally, okay, fourth actually fails. We get above it, so now you're counting again for bulls. Okay. So, and the same thing you could do it on the RTH as well. And as you're doing that, have your measured move, risk reward, and all these pushes should add up with risk reward and converge pretty nicely. So here's your first, here's your second, here is your third gap down, here is your fourth. So don't be so quick to buy. Wait for is signal bars, bull pressure. Bar 28 is signaling you, then 31, 32, and 33 signaling you. Once you start to see bull flags and market is getting above EMA, you're going to look for bounces. Some bounces will not going to touch the EMA, but you can count them. Here's 1, maybe 2, maybe this is 3, okay, and we're going to get a fourth one. That's going to gap up and put us here. Then you can, if we get a failure, then we can look for a couple of legs down, swing for bears. So, yesterday is, you see bar 3, you can start to sell if you haven't sold higher. And you see right here a tight trading range, so I'm expecting market to come down here. They come in here and they break it. So once a support breaks suddenly, okay, it turns into resistance. So you're going to look for 2 sell opportunities. You're not going to sell the very first one. If you put a sell stop order, you don't get filled anyway. But here's your second entry. So that's low 1 is and low 2. You get a rally here. You get a reversal. First bull rally, that's the first sell. But it's the bull rally is smaller than the bear rally. So this is, you're looking for low ones and low twos. If this was a bull rally and then the next come the bear rally, but if it was smaller than the bull rally, then you're going to look for high ones and high twos. In this case, you're looking for low ones and low twos. Since we are below the EMA, that's the right thing to do. So you're looking for low two, possible double top is with bar 6 high is and bar 13 high, and bear flag. So you're looking for a market to come down and test the bar 8 low and it continues selling. They had a breakout, but by then we have several different, maybe 1, 2, 3 wedge here. Terrible follow through with bar 21. By the way, why is 21 up there? Okay, here we go. That was wrong. Terrible follow through with 22, and but is strong bull bear bar, probably wants to get another leg down. So we have a gap here. It's a really nice bull bar, but you got a bear rally and a bull rally. What do you think this is? You're looking for a low one. They made a new low. Now, and then they made another low, but low two failed. So if you're actually still selling despite the bar 28, and then you get this bar 31, you're going to sell up here, and you're going to try to break even before it goes against you. Market will give you a chance to break even. If you were still selling here, maybe you sold here is underneath 29, entered, or you sold, I don't know, maybe you sold a close. If you sell underneath 29, you haven't entered with low two. You move sell stop order underneath 30, you're still waiting. You still haven't entered. 31 did not go one tick below 30 to enter you into a short. So if you actually sell the closes in a trading range environment, you get in trouble. Remember that, okay? That's a market sell. You sell, if you're trying to sell with a stop order, it gives you a little bit more security, because if market doesn't want to go down, they're bullish and going up, chances are it's not going to fill you in to a wrong trade, okay? But the limit order buy and sell is better. Anyone who sold here, maybe sold 25, okay? Maybe had a sell order, got activated. They're going to sell at these highs again. They sell, right? What do you think is going to happen? It's going to come down. So if you're stuck somewhere here, maybe you're stuck here, the average price will be hit, and that's going to minimize your losses and allow you to exit. You still don't exit, and a bar 37 and 38 happens, you're going to have to now take a loss and exit. But if you buy quickly, because this is a bull flag, and it's trying to get a measured move, market is giving you a chance to now make the money that you lost here to the upside. Inverse head and shoulders, strong bull bars, expect several legs up, therefore several bull flags you're looking for. Last flag will have a much larger channel, therefore triangle. The final one could be an expanding triangle, okay, with an apex, which is a much larger trading range. That's where you need to look for failures. But you have to find the apex and see what the market is doing around that apex. And yesterday, remember I was selling, I had to exit out, and I had to buy above 77. And so I said, this is difficult because you have more than 5 bars until bar 75. So 1, 2, 3, 4, 5, 6. When it goes sideways, probably it wants to sit around or close around the EMA and not going to get a big breakout. And they kind of failed. So right now we have market is getting a breakout. That's a cup and handle. Here we go. Well, I think we're going to hit that 40, 45 area. I have to adjust this. So here we go. You got a cup here. You got a cup here. Yeah, and that's a flag I said, and we're getting that. So you can actually measure the measured move. Let's see if I'm going to be conservative with this. So that adds up 45, 46 area. and we could get there very quickly. But I want to check the calendar for news first. PPI final demand 8:30 came out. We have Neil Kashkari, Fed member, will speak at 10 a.m. Eastern time. Nothing after that. So, yeah. All right. So we're going to gap up. Remember what I said yesterday is we might get a gap up. Okay. We are right at the high of yesterday's trading range. Market put us into a trading range yesterday. So the bulls want to break above high of yesterday. We have two magnets. We also have March high. I think that was like 63. I'm not sure. If somebody can measure that March high, I think it was 48, 63 or 64. I'll mark 64, but if you guys tell me, I'll get that fixed. January high. Trying to get above that. Need to fix this now. Strong gap up is already testing the highs. If bulls and the bears agree that this is a good price, we could continue to go higher. Bulls need to close the bull bar here. And not just 1, 2. Otherwise, it's just going to be too high. No one wants to buy. And we have a gap up already. They may want to come down and then swing. So let's see. So we have 20 bars. So is 81, 82, 62. That's the low. That's the high. That's the average. If we cannot find buyers here, or we find buyers, I'm going to have to extend this range. But then we trap them. Market could come down, not here, but if this extends up, the average price is going to be here, and we might end up coming back down. But so far, bulls are trying to get to the January high and a shallow measured target there. Measured move target there. There's a 30-year bond auction today. I don't see it on mine, but I believe you. I'll take a look at another website. All right, bulls are buying. They're trying to go higher, but they have to close the bull bar here. Bit of a resistance, and it might be not exciting the bulls to buy this side. So they have to close bar 2 strongly bullish and above the Globex high. If it fails, we could quickly pull back down here with a couple of legs, or overlap with bar 67 at the minimum. So they need to find buyers right here. Take a look at something on the ETH. So they failed. Okay. Trying to extend further, but I need the second bull bar. We're probably going to go 36.50 area, 36.25. Could get a 5-point trade. That would be, I think the market is trying to get to 36.25. They're trying to test 36.25. Well, let's see if they can make it. They can just push this a little bit more. Maybe one tick above this, shallow. December high is also magnet. Looking for 36.25, 36.50 test. But this bar has to close bullish. A little bit more, or accelerate into December high. No longer care for this. A little bit more. Who's trying to get a 5-point out of this is move. But that means they have to test 36.50. I don't see a bond auction listed anywhere, but if you do see it, oh, you were looking at yes, okay, good. I got excited there because 30-year bond auction can move the market real fast. Not that we need it on a Friday, because we already have volatility in the market. It's over, that's 5.25. So its average move is 5-point up or down for the candles right now. So a little bit more space to upside. I don't like the fact that we have a strong upper wick, but two bull bars, both of them are closing on their highs, and one of them is really strong. I like to see bulls actually take out the bar 2 high. Can you guys hold on a minute? Sorry about that. So I'm looking for bulls to keep going higher here. Don't like the upper wick of bar 2, but we do have a magnet about. Bulls are trying to get a minimum 5-point. They close a bull bar with bar 3 above 5-point. Now, where is that 5-point coming? Why am I so interested in this 5-point? I'm adding a 5-point. I'm measuring from here. Okay, let me take a look. So that's a lot of points to the upside. That's good. But I want to see what was the counter. Counter didn't really meet. Well, maybe it did. I don't know. No. That was not really 9. If you measure from here, see what happened there is, so I measured 40 points. I'm basically looking for additional 5 points to see if the bulls are actually going to be able to get that, because getting that means we will get another brand new trend starting. That's a 425, not necessarily is, maybe I measured this wrong, but yes, I did, because I got a lot more than 425. So, but they couldn't do the 5-point. You see what happened? I don't know where this bar is going to close. We don't know that yet. So bears trying to prevent the 5-point close, because if the bulls actually close right here, that means they could go another 1 point and up to 10 points. So we could get a trend. But the bulls have not yet taken profit here at the 40-point. They got to follow through. They're paying themselves a little bit in case this fails. But really, the bulls actually want to get to the 5 and above. So this is where point counting can help you not get stuck in trades. So I kind of scalped before it went to the 5-point, just in case if it fails, because generally it fails, and then we get another 10, 20, 15, 20 points to the downside. And so I paid myself. If they close a bull bar, I don't have to worry about it, because it can go another 5 points up above. So pay myself, still holding, but if I see a good sell signal bar, I will exit. There's a little bit more room to the upside. I'm going to go here. So another reason this is this right here was 36, the shallow measured move from this structure. So we reached there. So they're paying themselves. No matter how you look at it, there's a reason why we're stalling here with bar 2. Oh, sorry, bar 3. So, but that's buy to close so far. And bodies are not overlapping. It's only wicks. So bulls can continue to go. So just give me a second, please. Sorry about that. So there's a little bit more room to upside. We could go test around 36.75, 37 area. Bad follow through, bar 3, but it also didn't close bearish. So I have no reason to exit, and the market continues to go higher. Here we go. But they really need to close that bull bar above 5-point mark, because if they fail, then we could reverse back down. But so far we're heading towards the December high. But the bulls need to close the bar is as bullish as possible, otherwise we could come down if it fails. So I'm looking for a little bit more space up, at least test 36.75 or 37, maybe push towards 40 and 45. Trying to see what else is there. Strong resistance above. And for a little bit more. We are above the high of yesterday. We went above high of yesterday, but we didn't really stay there. In fact, we didn't have any bull bars closing. So we failed. Today it could be the same if we do not get bounce from the high of yesterday right now. So if we get the bounce, then we're going to go higher. But if we don't, then we could actually start to descend. Then I would say, if this is too high to buy, this would be the range, 20 bar range, and this would be the average price right here. Markets start to come down with a couple of legs. However, okay, so see what happened, one bull bar, bad follow through 3, and a bear close. If we start to descend here towards the average price, this is average price now, there will be bulls wanting to keep the market, okay, above the EMA and keeping the gap open. If we keep the gap open, we could still go higher. We could have a bull trend, like a small pullback bull trend going higher. Remember, we had a rally within the form of a small pullback bull trend with a dip, and now it actually gapped up. So we're still in this bullish move at the high of a trading range. Bulls are trying to get 50% follow through on this yesterday's bull trend, and it could go about 6 to 12 bars. Then it could go sideways and reverse back down. So I would look for some kind of a wedge pattern before selling anything. We do have a micro double top with a neckline is already broken underneath 3 and a strong close bar 4. There might be some sellers there, but we might get another bear leg here. The second bear leg. But I need to see what the bulls will do here. I exited the long, but I'm looking for pull back a little bit and the bulls to show up again. Maybe at the close of 1, open of 2, probably limit buyers waiting there. But can the bears suddenly sell? They have to close bar 5 on its low as a bear body. They do that, then we come down, we bounce, that would be a pullback, and then get a second leg down. We could get a double bottom with bar 1 and still get a Walmart trade for bulls, but I want to see what will happen here with this bar at the moment, because we could still stay above. They seem to be buying the close of 4, so they're wanting to continue this trend higher. I took my profit just in case this fails at the high of yesterday because of this trading range, but I will be quick to enter back in again. Just want to see what will happen here. We do have a conservative measured move target to the upside. You can also take that low. That would put us into 51.75. I do not like these wicks when there are too many of them and large ones, so I try to stay conservative. So what happened with bulls? Well, they came up to 5 point, but they couldn't close above it. When this happens, it kind of tires the bulls, so they are quick to take profit. They see a bar like 4, they're going to want to take profit. So they're entering with a sell stop order early below 3, and the stop above, they're looking for a 5 to 10 point move to the downside. For bears, target is 27.50 to 26.50. If they can close a bear bar here. But limit orders, I said, buyers are right here with the bar 1 close or bar 2 open, and we could bounce. They're going to buy because they're stuck above bar 2 high. But the problem here is the bar 4. Many bulls are already exiting, okay? So bears want to close a bear bar, and they want to bring the market down to minimum 27.50, possibly 26.50. But they're going to have to close this bar bearish to get a follow through. We might go slightly test underneath bar 1. If we get the third bear bar, then it's going to be sideways and down with another leg. Some bulls are buying because they want to average out and exit out before it's no return, no point of return. So we could quickly come down to 27.50 to 26.50 suddenly. I think the Kashgar is about to speak at 10. So with the close of bar 6, I don't know what he's going to say, but that's going to excite the algos. So I would be careful here. Bulls trying to keep these double bottom with bar 1, and they want to keep swinging higher. The target is 45, 46, 50 area for them. So if they can keep the gap open to EMA, that's fine. But I think we need to come down with another leg before we trap the bears. So I like to see one more leg. This is still the average price. Bears did a terrific job here, so they want their reward. They want a 9-point minimum, possible 10-point average move down. That's why the 27.50 to 26.50 is target. So I exited and I sold underneath 4, and now I exited there. This bar filled me, bar 5. because I realized that this wasn't going to go up, and they were, even though there were buyers here, I saw the buyers went there and started to come down. I put a sell order right after. So now I'm looking for is market to quickly come down to minimum 27.50. I'm going to scalp that, by the way, and I'm going to leave a runner and see if it can actually come down to my average price here, or overlap with bar 67. Is quite a bit. Okay, wow. Okay, the market gave me a lot of money here. This is great. 26.50 I got instead of 27.50. Thank you very much. So we got a nice 10 point and 2+ ticks there. So how you guys doing over there? I know I'm kind of rushing. We could still get a double bottom here, and if the bulls can keep this gap open, we could still get a follow through. Remember, this is a breakout pullback. When does a pullback becomes a measured move for bears? Well, if they close the bar like this, then you're going to be like, all right, so this isn't going anywhere. And bears are probably going to want to bring it down to the 67 area. So you want to see bears actually close bar 6, a strong bear body on its low, somewhere around 48.25. It'll bounce. It'll come down to 48.25. It'll bounce a little bit, but it could continue to come down with another leg. Right now, this is a one leg. So we have to bounce and go sideways a little, and then come back with a second leg. This is coming down, but it's still the 10-point zone we're in. It still needs to bounce. But you can measure the measured move. You should pay yourself here, leave a runner. We don't have to bounce. We could quickly come down here. So average price is where bulls might wait to buy. And then there's the news. So the news can actually accelerate is right into here, and we could actually get that 48.19. So far, I'm in my runner, and I'm holding this. Wow. Okay, that's your measured move, and that's your overlap with 67. We're getting a bear trend here. It's because we now have a wedge top 1, 2, and 3. It needs to bounce a little bit, but it's accelerating now. Whatever Kashkari is saying, it's exciting. So it's exciting, the algos. We are now coming down to the gap close with yesterday's close bar 81, and bears are targeting that now. So I don't care about this anymore, but be careful. You should pay yourself here. I don't care about this anymore range because we're below the average price now. So there should be some buyers here wanting to trap the bears underneath the EMA. I'd like to see a bounce here, strong enough. And bears can continue to sell this as long as they can close below 1675. If they actually close below 1675, we're going to come down further into 1325 and 10. In between, there will be a bounce. 1325. And then I'm going to expect this to be tested. Furthermore, deeper pullback, since it's trying to become a bear trend, is going to be 0525-ish. Because there's a trading range low there, so that's what I'm targeting. And then there's a tight trading range here. That's what I'm targeting with 48.10. So if you're wondering where these levels are coming, I'm not pulling them out of my hat. There is a tight trading range here. So 48.10 corresponds with that. I'm also doing some calculations, but that's the best I can give you. So 1325 is next. See if I can get 48.10. So far, 2 of my targets are met. We're bouncing a little, but most likely bears want at the minimum 48.10. So you should have taken some profit here, but if they can't close the bear bar, we could get a follow through 48.10. We need this bar to close bearish, or the next bar to fill the lower wick. What happens if we don't close below is 1325? Can we actually bounce strongly? Well, there was a breakout test area, and then the bears actually broke it. So it's basically bouncing, and it could still sell. So 48.10 is my next target. And if this bar closes on its low, bears will continue to sell. We've got an imbalance here, okay? Next pullback, bears probably want to get a bear flag. But we need a bear bar closing below the EMA, below its midpoint, and then we get a follow-through bar. If bulls are going to bounce this, 48.10 is a better place to bounce it. So I want to see bears actually close a bear bar here. But if they fail, and then suddenly we start to get bulls, I'll exit out of my short, and I'm going to look to buy. But even then, there are sellers waiting up here. I've got an ATR bar. It's a big bar. So I'm going to try to measure that. And just to get some targets, right? I'm not measuring the wicks. You can see we just tested that target. That's one time the body so that's measured move now if we do move up here instead of coming back down to the next targets, 233%, and that's where my 48.10 ends up. So that's a really good. I am one tick above that, so I want to see actually bears come down and test that. But I don't like the lower wick of bar 7. Makes things very difficult. But we did close right at the 1675. Now bears could have been better if we were to close one tick below. I'm not very happy with that. So if the pullback actually brings us back up here, there will be sellers here. However, bulls can bring the pullback all the way to here before actually selling back again. I'm losing with my runner right now because it bounced so much, right? My scalp here it's bouncing. I was really hoping to get here. There might be some bears wanting to sell the first bull bar they see. So I'm going to wait to see how this bar is going to close. But the bulls have a possibility of going and testing the 6th low and then selling there, or we're going to continue to go higher to 66%. And then there will be limit sellers there. I will sell with them, and I will break even with that contract. So there's always a way to fix. That's the first bull bar against a tight bear channel. So the high probability bears will sell higher, maybe above 7, maybe around that area to fix it. Okay, you got 1, 2, 3, 4 strong bear bars, all closing at and below their midpoints. So probably bears will sell the first pullback bar here. Anybody who sold a 7 close, trapped. So they will try to sell. It's trying to reach that. Let's see if there are any limit sellers right here, 66.50 or 33. It's going to come down and give the bears average price to exit out eventually. As it gets there, it starts to slow down because the bunch of limit orders. They're hitting limit order sells. That's why body is like slowing down. But I mean, the sellers could be all the way up to 33% too. So say is they sold here. This is the average price, 20.75. Strong bull bar. There's nothing to make a double top there, so bears are struggling to sell, but they want market to come down here so they can get a break even. Not really true break even, but average the losses. So 20.75 or 21. Better if it actually moves one tick below. So 20.50 would be better, but 20.75 we could quickly hit, is because you see how limit sellers entered there. Now they are kind of averaging their losses already, but it's not enough. We need market to come down and test right here. What if it just keeps going higher? There will be sellers waiting up there. But right now bears want is 2 bars overlapping. They want to bring it down a little bit, but strong bar. It's not an inside bar. It's not an outside up bar. Even though it closed on its side, it's got an upper wick. Bears are disappointed, so they want out, and they want this target right here, average. But be prepared. We could actually hit these levels too. So they're trying 2 bars overlapping, limit order. But it's a very strong bull bar, wants to get a follow through. So more will be selling around here above. And then you have to remeasure if that happens, if we go there instead of coming down here first. A little bit more. I'm waiting right there. Come on. I got it. This is great. I love it when things go my way. But it's because I know what the heck is happening. I've studied this behavior for weeks and weeks and weeks. And I came to a conclusion. Al is genius. And when he uses the 66 and the 33, I said, I can apply this. Because, and this, like, light bulbs started to come out when I started to watch Al's old recorded sessions. And going back, before I didn't understand what he was talking about. It was like, limit order sellers are waiting here, buyers are here. I kept going back, why do they sit there and wait? Why exactly is he pointing right there? Because he knows something. Then I started to put 2 and 2 together. I said, look, we got an imbalanced bar here. Selling was very strong. If there's nobody selling 1 tick above 7 and a strong bull bar close, there's a reason. There's an area where machines are calculating and finding the area where all the orders are. And first it wants to hit there. And that happens to be the 66%, 50 and 33. So go and do your homework this weekend. And you come back and tell me if you can actually enter in the right place. Rather than entering here, you enter here, you get a much better price to sell. Now look at that. I actually broke even. Now I have a runner targeting. I got a break even, full break even. In fact, look at that right there. So market was very, very forgiving. So now can market continue to come down? Now we have a micro double top, but this bar has to close where the bears actually got stuck, which is right here. Then they will try to come down and close below 13.25. Then this is still the target, 48.10. Al Brooks is, I believe, sometime like March 2021. Didn't do the 20-day or full month coverage and all day. He used to do all day. I don't know how he did. That's major stamina. I mean, I do 3 hours and I'm dead meat. I mean, I can't even find my words to speak. And he did the whole day. So just look into 2020, 2019. After 2021 is March, I think. Started to become like 18 days, 16 days. And he still did the full days, but it was less. Then is going into 2022. I think it was like 14 days or something. But you could go all the way back to 2017. And yeah, you're going to get a repetitive price action reading. So any month or any year that you purchase, we have bundles that you save a lot more. Instead of just buying 1 month or 3 months bundles, there's a yearly bundle. It's pretty much the same price action he's reading. That's what I would recommend. Now, Brad's reading those bars the same way as Elle did at the end of, that's why the recaps are very important. So he's pretty much pointing out where those sellers are or the limit buyers. I'm just trying to go one step forward or further, really trying to pinpoint where those are with the right bars. You have to select the right bar, which is a breakout bar, okay? I call them an ATR bar because they is large ATR range. Probably wants a follow through, okay, leg 1 or 2. So but you gotta know where those levels are. So the measuring really helps. Okay, so we have a bar closed below 1675, but it's nothing below 1325. Bears want the 1325, and they probably want to come down to 4810. Further down to 0525 is also doable. So you got a bear flag happening right now. So, but the bulls may want another leg somehow, but this is really good. We got gap here so they sold even underneath 8, and they want to follow through into 4810. $48, 10, 25. I say 10, 25. Okay. I'm going to change because I think I might have mismeasured. So I'm going to scalp 1 tick above to get filled faster. Wow. They really want to pay me handsomely. Sure, come get my order. Oh yeah. Okay, excellent. So now it's accelerating here. That's what the runner is for. Another breakout bar, so you can do the exercise right there. Same exercise. See if the pullback will sell from 33%, 66%, or is underneath 9. It could go all the way down to, if they can accelerate, so this is the next target, 05. Might even move underneath 03 area if I'm calculating with the ATR. If we can find some sellers here. I don't. Okay, maybe underneath 9. Bar 9. Yeah, we just tested the 66% pullback. If you measure the body of 10, limit sellers showed up there. So let's see if we can actually get a follow through into the breakout targets from underneath bar 10. First target would be 848.08, and the next target would be 06. So anybody who entered with a limit sell, they want this target and that target and the measured move 04. So they can extend into 05.25 maybe. 2 legs down, probably wants another leg down, even if it's small. We are stalling here because of this tight trading range. So bulls are kind of defending this area, and they don't want to let go. But we need to sell one more leg. Now, if we take out this body, then you're going to think, okay, it's not going where I want it to go. It did sell, and they scalp because you got overlapping bars, but it's not enough. So more bears will sell a little bit more, and they will try to exit out. But this could now reach the opposite targets as well. This is where you wonder if you're selling too low. And this right here, I said, is area of interest, and therefore its support. We're going to reach there. We did. I wanted to see more targets to downside. They have sold, and it actually came down. Think about it. They sold here. It came all the way back down, about more than 3-4, just about 4 points. But that ended up becoming a scalp. So there might be some sellers up here again. Possibly is somewhere here in this area, and they will try to break even. I don't know if we're going to actually get another leg down, taking out the bar 10 low, because bar 11 is a very strong inside bull bar. But some bulls will sell up here, and they want at least a little bit overlapping with bar 11 before market goes up. Now we have a leg 1, leg 2 at a support. Bears want another leg, but the 11 is problem. So they will sell maybe a little bit higher, and then they will try to break even in case this actually fails and goes a lot higher. So disappointed bears probably want to sell before bulls take it all the way up to the bar 10 high. Bulls want to get a breakout from bar 10 high and test the 2250, 2225 area. But bears want to bring the price down to at least the midpoint of bar 11. If they do close a bear bar below 1450, they can come down and test right here, because they're disappointed. They could even test 1075 or 11 area before exiting. So I want to see if the market can sell here into 11, 1075. But we're kind of testing the midpoint. Better if the bears can actually close a bear bar here. So I'm going to see if we can push this down a little bit more. Bears need to close a bear bar. They close a bear bar, they will come down and test the 1125 area. 1175, 1125. Maybe even further down these open of bar 11. They want another leg down with a third leg, and they want to take out the 10 low. So they have to close this bar super bearish. But that inside bar makes it difficult. Just too big. Bears have a minute to minimize the losses here, because they were still selling into the next target, 0525, 0550. But they kind of did minimize. I did say that we're going to overlap with 11, but too bad they are not able to close a bear body here. They have About 20 seconds left to close this body as low as possible, as bearish as possible, to get more bears. Sell the close of that bar, but bulls disagreed. Now bears selling the close, so it's a limit order market. Not a good bar, but maybe we can come down a little bit more. Otherwise, we're going to go higher, back to EMA. See, I ended up exiting with is 12. Looking to see if we can actually go up a little bit more. Okay. I ended up exiting. It came down, gave me an average price. I held on to one more contract. I wanted to see if they could close it. Once they closed it, that kind of made me upset. But I kind of expected the bears to sell, so it did. So now you can use the opposite target, breakout targets for bulls now. So I lost a little bit there, but then I reversed it right above bar 12, and then it reached the EMA, which my target was 133%. Now I'm looking for 166% tag. If the bulls gave me that, is whatever I've lost here, I'm going to be doubling it back with this bull move up. So saved some, very much minimized the loss, but it still was a loss for that one that I held. Just hope that this would close, but came down, it didn't close, it went up very fast and closed higher. That's where I said exit, put a buy order, and then target 133 and 166. Could go up to 200. So it's an area where buyers showed up. Maybe it was already 1, 2, and 3. So it's 166 to 200. Bears want a double top with bar 10 high. This is still a sell zone, although it looks color is different, but it's still a sell zone. If we can close this bar with a strong upper wick, bears are looking for a double top here. I still want to see 166 tag, but if a bar closes below 133, I'll exit out because we could get a double top. But so far I'm holding for 166. So I did say the bulls will try to get price back up to is bar 10 high. It's an outside bar followed by inside bars. Bulls want a breakout from its range, but it is a bear bar. So bears want a third leg down. They're looking for a double top bear flag. So here is your low 1. They're trying to get a low 2. Next bar, if it moves underneath bar 13, would give us the low 2 sell. That will be a double top bear flag at the EMA. Really is not good price action, to be honest with you. Good breakouts. Tries to get a bear flag in a second leg. Doesn't go far. So now bears are scrambling to get the third leg, selling at the EMA, still trying to break even. So bears need to bring the market to 1125, close below 1125, then come down and test the bar 10 low to get a breakout and commence the third leg down. So we haven't even closed a bear bar below the midpoint of bar 10. We get a close midpoint of bar 10, which is their outside bar, followed by inside bar 10, 11, right? If the bears close a bear bar, is right now we're in a trap zone. Bears are trying to trap the bulls. They kind of did, but this bar needs to close its body below, where is that? 1450, 1425. Bar 13 failed. So bulls now need to close a bull bar above 1250. Hold on, 1750, sorry. to get a breakout into 21 and 2250. So this is where it can go either way. So right now we have a weak bull body. Bears still are upset. They still want a third leg down. Some bears are trailing sell stops underneath 11, 12, and 13. Difficult to sell under 13, but we could get the second entry short here if the bears can close bar 14 way below bar 13 low. Somewhere below midpoint of is bar 10. Then we become slightly more bearish. Right now it's still trying to get to the high of bar 10 and break out from there. Classic mother bar range trading. This is where they trap you everywhere inside this range of here. I'm going to measure that. So this is the range. We're still in the resistance. I'm going to get rid of it. So you see the range. This is the range you are in. From the high of 10 to low of 10. These, I'm going to use the measurement for mother bar. It's a great way to buy and sell with limit orders until you get a breakout, because you're in a limit order market. So is from 89% to 111 is a trap zone. Bar 13 is a trap. That's the midpoint. We close below that midpoint, we're going to come to the threshold, which is 21%, 1125 area. $12.50, 11.25. Market could come down, but they need to close that bar below 14.50. Bears need a bear close here, below that 50%. And we get that 50% below 13.25. Market will come down to the 10.25, which is the trap zone for bears. Bears to trap the bulls. I'm sorry, bulls to trap the bears. It could come all the way here and bounce again if we get a bear bar. So there's a scalp area. So that these bears selling will scalp starting with 11.25 all the way to the low or slightly lower of bar 10. But first they need to close a bear bar in order for this to come further down and look for buyers. So as long as you are inside this bar's range, you're going to look for bear traps up here. You know, I need coffee. I'm sorry. You're going to look for bull traps, meaning bears trapping the bulls. And you're going to look for bear traps, okay, meaning bulls is trapping the bears until you get a breakout. Wow. See how that works? Can you guys actually see the levels? Now they're extending. The trap zone is right here. From here to here. They can extend and then close back in again. Because we have not tested this thoroughly, this trap zone. See, we just tested it. Look, I'm going to get rid of this line so you can see. That's 11%, the minus 11%. That area is a trap zone. That's the first tag. Immediately greeted with limit order buys. It could still come down, but you can see how bulls are buying there. They will scale in even further to get a break even before bears actually get a breakout. We don't have a solid breakout for bears. We need a body closing below the low of this bar, 10. So you can see is anybody who puts a buy order here, maybe lower, one of them got filled and now they're scalping about 3 points, which can go all the way to the midpoint of this bar 10 before coming down. So there will be a lot of scalping, couple of ticks under that 50% is, okay, or 33%. See, that's a 4 point right there. Now they got a 5. You see how buying here gives you a 5 point average? Plus ATR is 6, so there's a 5 point in there anyway. So it's clockwork. It's if you can find these outside bars followed by inside bars. Within the inside of that, remember what Brad points out every single time. Look at this bar, look at its upper wick. Probably sellers above, buyers below. Why does he say that? Because it's telling you it's a range bar. It's a limit order bar. It's kind of a doji, right? It's got an upper wick almost the same size as the body. Pretty sizable upper wick. So there are two types of bars. There are trend bars, and then there are trading range bars, okay? You get this, you're in a stop order market. You could buy above it. If it's a bear bar, you can sell below it. You get this, that's the rules of the game changes. Instead of buying, you're going to sell. Instead of selling, you're going to buy. And then you're going to scalp within that range until you get a solid breakout with bodies. So that's what you're seeing here happening. And you have to allow is bears to trap twice and bulls to trap twice before you get a breakout. I'm going to take a quick break and be right back. Because I scalped there, I sold here in the trap zone, and then it went up there. I scalped and then I sold to profit. I didn't buy here because I was too busy explaining. But if I weren't talking, I would have already hit, price would have hit my buy order, one of them, and I would have canceled the rest, and I would have scalped at the midpoint and still made money. But so far I made up. I was coming down, disappointed, sold again, exit, went above into the trap zone, took profit, and then sold again there. It wasn't going where I wanted to go. And then as it came down very fast, it filled me, but I didn't get a chance to buy. So that's too bad. But pretty happy with the result right now. So now we're getting a solid breakout into the targets, 05, 25, or 0550. See if the market can continue. 0550. Maybe we could get a quick tag. There's a little bit more room to the 04 area. 0350, 04. So 05, 050, I'm sorry, 05, 50 or 05, 25 maybe. But where's the solid breakout? Where is the bear body? Market is moving extremely fast. 7 points up or down so you have to trade small. If you're normally trading with 5 contracts, lower it down to 2 contracts. If you're trading with 3 contracts, lower it down to 1 contract. If you're trading with 2 contracts, that's your max, switch to micros. Trade with multiple contracts in micros. Because it's going to reverse back on you. See, we couldn't even get there, but we did test the target. This is a volatility breakout, but not actual bear breakout. But it reached the first shallow target regardless. But this is not a bear breakout. So now is everyone who was still selling, looking for this target, will try to sell up here because they're probably stuck. This bar now closed higher. They're going to sell close to the 50%, and they're going to try to get a break even. And that bar's purpose coming down is to give those bears break even, who might sold underneath or the close of bar 14. I'm going to take a quick break. I'll be right back. Let me get these out of the way. This is just too much. We needed a bear bar below the 10 for market to reach. I'm no longer interested in this because bears failed there. If the bears get another bar or two, it's kind of too late. This bar is too strong. Happens to be the trap of the bears who got a third leg down. So now bulls want to go higher. So yeah. Okay. Be right back. Okay. So these kind of bars and this kind of behavior is market's way of saying that be careful. You can still sell if you think that this is a double top bear flag, you should be entering either with a limit order up here or with a stop order. You're in and you're moving towards the targets. But it's also its way of saying that it will trap you until it gets a solid breakout like this. So they trapped 15, goes back up, then the bears get a second leg, but it's still bearish. So it's still trying to come down. There's a little bit more room. Possibly come down here and there. It's a bear trend after all. So 0250 perhaps. We need bears to close a bear bar below this level, then they can swing into here, possibly even here, but it's overlapping bars, so you can't just sell one tick underneath 16. You got to sell with a limit order, maybe at the breakout level, underneath bar 10 breakout level, and then look for a bear bar. If you don't get the bear bar, then it's failing. It could suddenly start to close bull bars. You have to exit out of your short. You should have sold here, so those bears are taking profit down here. But we get a bear bar closing below this level, market will quickly come down here, 0250, 0225. There you go. So they're accelerating. Now we have a third leg, a lot more stronger. That's my target. So just to do a quick exercise while still this is happening. I can't really show you. I need a clean slate. So many things happening here, but maybe I could do it here. So here think about this, right? You have a bar. Okay. This is your bar. And this is the range you are measuring. You don't measure right away until you see an inside bar. Inside bar could be same size as the body or like this, doesn't matter. Maybe like this, and it has a maybe lower wick like that, like this. So what you're doing is you're measuring the outside bar, which I called mother bar. Okay, I measure it, and I have a template labeled. Plots is everything, but hold on a minute. I'm gonna do this. Change that a little bit. Okay. So I measure this height of this bar. So now I'm looking for where can I buy and sell? This is the trading range. I don't want to do anything in the middle. This bar closed, say this is a bull bar, this is an inside bull bar. It closed right at the 79, but it didn't close above it, okay? Trap zone begins at 89, goes to 111. This is the first bull breakout target. Anything blue, that's a shallow. Close above it, we go to the next one. But you don't expect a breakout fast. So now, bulls maybe they did close. Let's say they close one tick above. That means they're going to go in this area. If the market was coming down, what you can do is you put a sell order, you put a sell order, you put a sell order. Goes and fills you, and it comes down. Take profits here, scalp, and then hold one, market to come all the way into the next trap zone from 11 to minus 11. Okay, as it comes down, exit. Or put bunch of buy orders. It comes down, hits that buy order, it exits you out with this short. Then it hits your buy order before going back up. You're already making money now onto the opposite side. Because until it hits these levels twice, before it hits these levels twice, it's not going to get a breakout. Okay? So it has to test twice. It comes in, goes up, comes back, goes up again, then it can go up and then break out. It might even try to sell again, but selling is shallow, then you get your breakout. Otherwise, is say this happened, right? We went there, tested, something like this, and we trapped. So now you're selling. And we close a bear bar. Trapped, okay, and selling. So, and it closed right there. It's going to sell into this area. But you have buy orders waiting there, all the way down here. Maybe 2 of them will get activated. Then what you will get is another bull bar, okay, maybe right around here, maybe like that, maybe with extending, or sometimes it doesn't extend, but it's never going to protrude the minus 111. So what it does is it needs to test at least once or twice the sell zone, the trap zone here and there before it gets a breakout. So therefore, it's a limit order market. You're buying at the low of the trading range and you're selling at the higher trading range twice before market gives you a direction where it's going to break out. It's a great way to scalp, but you have to practice, okay? So utilize those areas. Don't do anything in between from 111 to 89% to 11 to minus 11%. So look what happened here. We finally get a breakout. We test the breakout point, and the market sells into my target. And bears didn't really close a bear bar. It goes back and tests the breakout point again, which is minus 23%. I don't know if they're going to be able to sell, but they're probably limit order sellers here. They want this bar to close on its low. What if it doesn't close? This is the second breakout bear bar, and I did bear target. And I said we're going to test there. We have tested there. They can still sell, and we could get the measured move target of bar 10, which is minus 100. But this bar in 50 seconds needs to close below its midpoint, okay? What if it doesn't? What if it just goes and closes inside? This is now a resistance. What if it closes here? Can they still sell? Well, depending on how many legs we have made, there's that price action reading. Leg 1, pullback. Leg 2, pullback. Leg 3. We might need to come back and maybe make a double bottom with 17. So anybody who was still selling into this target, they will try to sell and break even with that bear contract. And they will sell inside this area since this is resistance also. What happens if the bulls actually get an inside bar and then open another bar and closes within this range? Now here's my problem. This is already spent. Look, I have another outside bar, inside bar. And this outside inside combo already reached the breakout points. This no longer is valid. This is no longer what I should be trading. This is my new range right there. So now I measure that. So probably sellers. Look, this bar already tested the Trap zone, look at the wick testing inside. There were buy orders there already. They bought it, it went to the next one, but it didn't really quite, let me see. Yep, it tested it right there. But it's a really strong bull bar, closed above 79%. 79% is a way of me telling if the bull bars are closing above it, chances are we're going to go higher. It's like a bullish threshold that the bulls are showing me that they want to close above, is especially with multiple, like a consecutive bull closes, they will want some breakout bull targets. Okay, and 21 is the same. If we see bear bars closing below 21, that's like the threshold, market is becoming bearish. I should look to swing, look for legs, bear legs. So this is where look, there were sell orders there, right? So the first one right at the 89 activated. So those bears are actually making money. How many points? Our ATR is 575. Half of that is 225. So, I'm sorry, no. 275, say. Get that? Oh yeah, look, 250. So, you just about, one tick goes to your exit, one tick goes to your entry. You just get about 250. So, you really got it. So they scalped it. Now, if this bar closes bullish, we're going to go now test. This is the second test right here. Okay. If they break out, we could easily get there. Look, some sell orders just got activated there. Why? Because it's the second test, the second time bears are trying to sell. Okay. So now anybody who's selling there, ATR is 625. Half is 3. Can they make a 3-point to the downside? They might, but how would you trade this? I would not be looking to sell this. Why? Because market made 3 legs, and you got a really strong inside bar. If you're gonna do something, all of this is great on the second leg, first leg, but the third leg is trying to already reverse. There's a wedge here, and you got a strong inside bar. No one's going to sell. They try to sell and scalp, and then bar is now bullish because everybody's buying one tick above. So this price action, once I get the third leg, I'm not going to sell anything. If anyone's going to sell, they're going to wait for these targets to be filled, and then they will sell and try to break even. No one's going to want to sell against bar 18. By the way, we're getting a bar 18 reversal. So, but bulls need to close this gap, so they need to go and test up here. This is their next target. I see this. I will always expect bears to try to trap and sell and scalp. Nothing's closing below the 50% of 17, and the bar is now going back up. That means a lot of buy orders were above 18, and they want their target. So this bar body closes here. We're going to get to here very quickly. We might even actually get up here. Those are the strike levels. So 161.80, 1350, 1325. We might actually go and test. Bulls actually close the gap here. So they want this bar right here. I mean, this price point right here. They're going to scalp a lot here. Three legs. Once you have the 3 legs, okay, you can still expect trappings. That's what the trap zones do. And you saw it. Even here, we had a little bit of trap there, and it came down fast. So machines will use those levels. But price action is price action. After 3 legs down, you got a strong inside bar. Buyers are buying. So those are nothing but scalps. It's not going to swing back down. So, look, we did not close a bull bar above that line, 123. So now they're selling higher because these bears fail to trap the bulls, okay, inside the trap level. what are they going to do? They're going to wait for that target line to hit. They're going to have a scale in, and then they're going to try to sell and try to compensate the loss. And because they were selling with bar 19, remember, it came all the way down. So disappointed. Now they're going to wait for one of these targets to be hit. And it's kind of there. Look, this bar did not close. If it were to close one tick above, sell orders would be moved up here. They'd be selling that profit taking and still be able to break even. So, but I see these bars, I don't even go against them because of this wedge. Wedge is the most important thing. Is I try not to, I count those legs, and I try not to, go against and try to sell it. This isn't a strong channel, but this is a very strong bull bar. So there'll probably be buy orders will observe all of those sell orders. So you get a higher probability of this actually going to right here, 1355 or 1350. And when I'm taking profits, my scalp is always one tick under or one tick above. Market's trying to go to the third leg starting point. Either the body is or the high. This is the target for bulls, but they need to close above 123%. They can accelerate very quickly if they wanted to. But if it fails for the second time closing above that level, we could pull back to the midpoint of bar 17. So it's accelerating to get the target, 1350-ish. We'll want a 10-point out of this. If we get the third bar buy to close, that's great momentum. Next pullback, they will buy. So they're trying to get to the target here still. They might actually get to 200% because that's where the 10-point is. I combine all of that together. So wait, hold on. I'm sorry. I'm wrong there. That's actually 14 point. So they're trying to reach the 200%. 13 to 14. So they got this target and it's accelerating because it's trying to reach the 13. Right there is, it might come back a little bit, or it's going to accelerate and tag the 14 average and then come down. But once it gets there, I know they're going to take profit and it could collapse. I take profit regardless. This one is overreaching because it wants to get to the measured move target of bar 17, which happens to be the next swing zone for bulls. Trap zones work, but it was nothing but scalp. And the bars close bullish, you have to switch sides and utilize the bullish targets instead, especially with the third leg down. You're going to get these outside inside bars a lot. So that's 1625, 16. That's 2 tick under. I generally take profit 1 tick under. So 48.16 is where my exit order would be. And you can see we just got it. So can it still go? There's no other outside inside combo, so these levels are still valid. You can even accelerate. It's trying to get to the 15 solid, but it needs to take profit, so it's going to bounce down a little bit. But that bounce is going to be profit taking at the second sitting level, 15 point. And if the buyers can actually finally get above 200%, they're going to get to the 20 point. 20 point starts around 19, slightly above the 261. 20 is right around there. If the bulls can actually push, it could overreach, but I doubt they're going to test the 20. Maybe 19 at best. Only if they close above 200%. This is where you take profit because we're also testing these third leg starting point, and there will be a lot of deep profit taken, so it could actually come down. So hopefully you guys actually took some profit there, paid yourself. Need to fix that. What's the open of the day? What's the open of the day? One thing I'm missing is open of year. That didn't help. Open of the month, same thing. Just, you know, you think my brain works well today. I have the open of the month here, so okay. That's open of the year. All right. They're still taking profit. Bulls need to close above 1625 to get follow through into 2050. But if they fail, we can have a deeper pullback and make a higher low. And that pullback could be all the way to the 17 high. But 3 bull bars by the close, strong momentum is markets can also bring us all the way up here, which is 2R of 17. So is that, I mean, we could get there. Or you could say first pullback is that's the projected. Bulls need to get above this level. That's their target. If we get above it, then we go to the projected target. So somewhere between that and that is their target. But we get above it. Just put it there. We get above it, then we're going to trim this line. That's 15-point profit taken. Bulls can still close a bull bar and go higher. Test the 13 close or 13 high. So we now have 2 consecutive closes above this price level, which was a target for bulls. That's good news, but bulls also tag the 1R, which is 200%. We now need a bull close above 200% in order to get to 261, 300, somewhere around above 261 is your 20-point. I'm going to mark 19. We're still at a pullback. And the pullback can still come down more if the bears actually close a strong bear bar. But there are limit buyers underneath 21 is here. What if we don't get a bear bar, instead we close above 200? Then expect all this level above, test it. I see these bull bars close above the target levels. I don't exit completely out of the long. I scalp and I leave a runner. Think about, okay, so is Alex, I'm going to make it so simple for you. Think about L's wedge. What I'm looking for is the correction legs. This is leg 1. This is correction leg. This is leg 2 because it made a new low. This is correction leg 2. And this is the third leg down. Okay? So where did the correction leg begin? Right here. Where did it end? Right here. Where's the second correction begin? When the second leg ended, and then the third leg is started. So this is your correction, this is your correction. To find a bullish projected target, I connect the first correction leg's starting point with the second correction leg's ending point. First correction leg's starting point with the second correction leg's ending point. But I'm trying to be conservative, is instead of, I don't like my lines to be steep, which it can actually go all the way up. But when I see something like that, I try to be conservative. So I'm expecting market to get the 19 and 20 point area. And furthermore, they can actually go and tag this before coming down. But in the meantime, I have two types of targets: a horizontal target, straight, and a projected target, which is extension. So if you have three legs: correction starting point, correction ending point. So you're looking for several legs up. Now I have two types. This is the projected target, always in an angle. A straight up target is the third leg starting point. So the market can go to the first, whichever comes first, and not actually tag this and then come down from it. In this case, a straight targets, which I put in there, this is your default one, okay, but we could test somewhere in. So it's never a one line, it's just an area. That's why I marked it. We could go there with several legs. Maybe we could go there, come back, go again. But if we fail to take out these levels, 19, 50, 17, we're going to come down and we're never going to touch here. So whichever comes first, you take profit. Okay? It's not that difficult. You'll see it all the time. Once you see it, you never not see it. You will see it all the time. Like here, go to, I'll do this all the time on actually higher time frames. I do it on Forex charts. Watch me chart the Forex charts on like 1 hour, 4 hour, with supply zones. I always get my targets. So like for example, it's 30 minutes. Get rid of these so you can see. I'm looking for big wedge. Oh, look at that. Big leg, correction. Second leg, correction. Huge leg before it came down. Why did it come down here and then went up? Well, let's find out. Leg 1, correction. Leg 2, correction. Final leg with a double top. Perfect for me to sell. But where is it going to go? Here's my projected target. Correction leg starting point, ending point, second leg ending point, but the second correction leg starting point is ending point. 1 to 4. Now you tell me. Here is there are two types of targets. You can take that. That's the horizontal target. I don't like to take I'm a conservative trader. I look for an area. That's the absolute low. And then I'm looking for last bull bars, okay, open. That's what I'm looking for. Look at that. It actually hit too. So this was the area I expected price to come in before reversing back up. So that's how you expand your profit taking. Whichever comes first, you take profit. Okay? Go do this on Forex charts. And you're going to be like, oh my gosh, I can actually swing Forex now. This is L's wedge. And it's a reversal back down. And in the meantime, while this is happening, you are miles ahead of the average trader sitting next to you. Because now you know, if you take profit here, you can actually reverse it back up to the next target for bulls this time. How do you do that? As bears are coming down, now you're counting for bulls, so you can reverse it into the projected targets. Leg 1, correction. Leg 2, correction. Final leg 3. Okay? Bears selling, bulls are smart bulls. Now you're a smart bull, Alex, the kid. You're no longer a kid. You're now graduating into college. Okay? What do? That was the pullback. That's it. But I'm going to do it conservatively. I know it's a little bit wonky, but try to see it, right? So that's the correction level. That's the correction level. I have two types of targets. It was last bull bar before the lowest low. Now it's the last bear bar open before the highest high. So I'm going to measure that. But it's never a one line. It's actually, okay, so take that one right here. 1, 2, 3, 4. Now you tell me. If you actually bought here, it's midday, you'd be swinging this for 64. I'm sorry, that's actually incorrect. 64 points and 25. 64 points. Now you change that Alex the kid to Alex the man. Are you? Well, I'm assuming you're a male. Now, because you're the man, you made 64 points with Rose's projected targets by using L's wedges. Okay, so there you have it. 64 points. You could have held it overnight. Why? And imagine if you actually sold. That's A, B, C, D. That's, okay, now going up. A, B, C, D. Correction. So if you actually waited for A to come down, and then A, B, C, D, start the sell with the C with a double top. Okay, so maybe you sold here. Maybe you sold underneath here. Maybe you sold this bar. I'm just going to be conservative. And you took profit right around that line. That's roll at 57 points plus 64 points. Or maybe you didn't take that. You actually, whichever comes first. You took profit right at 27.25. So that's roll at 55 plus 57. 112 points you made. Taking two trades with, maybe you did that with one contract. 112 points times $50. You made $5,600 starting 9:30 yesterday all the way to today, 9:30. In 24 hours, $5,600 you just made. Just utilizing wedges. Okay, so is enough with this. Let's get back. Bulls trying to close about 200% so they can get to the 20 point. Now I'm coupling that with the 20 point counting and wedges, and also I don't have a new outside inside mother bar combo, so these levels still work for bulls as long as they can blow through this close about, then their projected target is there. Now while this is happening, your job is now think ahead, because you're not an average trader anymore. Now you're looking to see, hey, I can swing this down maybe, but is it setting up? Here's the leg one pullback. We're in the second leg for bulls. We're going to get the second correction. You're not going to sell because this is probably going to try to get there. Then you're going to connect the 1 to 4. Then you're going to look for A to B. Okay, A, B, C is, and you look for D. So probably if that's the projected, somewhere here might be actual targets. So we might even get in there. with a couple of legs down. But you're not going to sell untimely anymore, right? Why? Because now you're smart enough to know these bears are providing you with bull targets. You're going to wait for these bull targets to meet, and you're going to count the legs. You're going to look for minimum 3 legs. Then you're going to measure your targets. Now, when do these finding the target gets invalidated? I have one rule. It's very simple. Is sometimes, remember L's truncated wedge. I'm going to talk about that. So the perfect wedge is, this is 1, right? First leg, 1. First correction, second correction. Second leg, 3 to 4 is your second correction leg. And this is the 5th leg. So first leg, pull back. 3 to 4 and 5. Top of the 5 is, if it's higher than the 0.3, you have an extension. It's exhausted. Always look for a double top to sell. Look for ABCD pattern. Back to 4. Or whichever comes first, is either that or that. You can take profit here since projected target is higher than the horizontal target. Okay, target is either 1 to 4 or 4. That's what you're looking for. Then you're going to look for a reversal. Sometimes it goes up and cannot get above and starts to sell more. Then your next target is this, and that's it. You're definitely going to look for now reversal, maybe a double bottom. So you have a leg 1, pull back, leg 2, pull back, leg 3. And then finally it reverses up. So now you're looking for targets. That's 1. That's 2. Okay, maybe it can come down for more, but that's 1. Okay, think about that. If the 5th leg or the 5th point it's higher, look for higher than the 3. Look for double tops or triple tops before selling. Sometimes you get these truncated wedges. 1, second push, and you get this. 5 either is on the same level with 3. Okay, that's 1. That's 2. That's leg 1. I'm counting the corrections. Then 3 to 4. Sometimes it's on the same level or lower. It could be slightly lower than 3. That's still valid. That means bears are in a rush to sell this fast. That's a truncated wedge L talks about. That means bears are getting ready to sell it fast. Okay? So, but the absolute no-no rule is that 4 can never be lower than 2. If the 4 comes down lower, then you're counting wrong. This is absolutely wrong structure. Look for something else. If the leg 1, correction leg, leg 2, 3 should be higher than 1. Okay? If the 4 comes down like this, that's bad. Okay? This cannot be your target. It won't work. That is a bad wedge count. Don't even bother with finding targets. Anytime that second correction is a lot lower than the first correction ending point, which is 2, 4 should not be lower than 2. Look for something else. There's a much better structure there. That's all. All right, so look, leg 1 is first correction. We extend it up. So that could be 3 to 4 setting up. But this is still looking to make a new leg up, most likely. So if this, my 1 and 2, if 4 comes down here, what does this mean? That means the second leg is not done yet, okay? So it's probably going to go up. Then you're going to look for 3 to 4, a new 3 to 4. That means this is a complex leg going up, okay? Anytime you see 4 is lower than 2, you do not want this. impulse, first correction, impulse, second correction, like this is no. This is probably already a leg one. Complex is, this is your first correction. Therefore, this is probably the second correction before the last leg going up. Okay? Here. Then this will be first leg, first correction, second leg, second correction. 4 is not lower than 2. Then the fifth leg. Then you can connect that, projected target, horizontal target, get a double top or something, sell into this. Whichever comes first, take profit. If market bounce but still breaks both of them, put a line, you're going to sell into that. But that's it. By then, market will probably going to give you the next channel with projected targets, so now you can buy into that. So this way you don't miss a beat, and you can actually trade both sides of the market fast. And here's another tip for you. Let me go here. Right? If you actually go to the line chart, you can see it maybe clearly. A lot more. Look, impulse, correction, right? And look, this is higher than this. So that means this is your 3, the 4. That's not 3, the 4. Okay, take that. 3, the 4 is 1, the 2. You can even do this on a line chart. And look, and probably try to come down, but I don't know what it's doing here. Sometimes you get the wedges in a trading range, which is really difficult to count sometimes. As long as 4 is not lower than 2, like for example, market is coming down, going back up, is coming down, going back up, oh my God, can I still count? Is there something here? Look, market is going back. That's 1 to 2. Next leg. 3 should be higher than 1. There's no rule for that. It could be lower. Does not matter. But the 4 should not be lower. Then here's your fifth leg. Now what do? Market. This is your projected target and a horizontal target. They're going to sell into that before bouncing. But generally, they come and actually test this. So you find your 50% of range. If they break that, look for a quick pullback to that 50%. And then start swinging. Not only here, this is your first target, and then final swing target. You're going to get this. You can find them all weekend and study them. Look at this one. Is impulse, correction, impulse, correction, impulse. But which one do I take? 1, the 2? No, this is lower. Then this right here probably is a complex 1 leg. First correction, down, second correction, down. So either I can take this or maybe take it like this. I mean, look, I'm almost accurate. That's because here. I'm going to take that, or you can take this. Trying to find, see, I'm not that accurate. It started here. Correction began here. It dipped. Fine. Or you can say leg came all the way here. This was the correction. Okay. Then this is the next correction and then that's it. Look. Trim. Finally comes down. You're going to find it. You're going to find all of this. Look, there's another one. Now get rid of this. Leg 1, pull back. is next leg, pull back. This is the final leg. See, bears are in a rush to sell. It made a double top. So this is your starting point of first correction, ending point. Now, there's something going on there. Is that 4 lower than 2? Nope, it's not. So it qualifies. So where could be the market going? Can bears actually swing down here? It is possible that they might. A, B is C. Heck, we could get a D. They might be actually wanting to come down to here. First target, and that is not your target. If selling becomes very strong, this is a 30-minute chart. There's also pattern recognition, very important. If bears actually take out this lower trend line, they're going to come down to 47.76 very fast. Here's another one. Look, in order for it to come down here, and it can come down here, this is their target, we move underneath this. Okay, we made a wedge top, 1, 2, 3, lower high, head and shoulders, and if we move underneath the key level and take out the Asia low, heck, we can actually come all the way down to 47.76, which is right here. But bears need to show me they can move underneath the key level. And then on the 30-minute, actually break this trend line. Then we start to extend down here. So I know I have stumbled on something as it's happening. Double top and they're selling. So, yeah. I think we're going to end up coming down to 47.76. How about that? Oof. That's a bear flag. 1, 2, 3. That's a bear flag. So, we're 76. That happens to be mid-January. And move underneath the 1-hour EMA. But what happened there? Why are we coming down? Well, whatever I said, whatever comes first, right? That was right here. If the bulls cannot get above it, we're not going to get the projected target. Projected targets are nice to have, not necessarily to have. So leg 1, pull back. Leg 2, pull back. Leg 3. Starting point to ending point, we're not going there. So that means maybe we're not done with this count. Maybe this is the first leg pullback, second leg pullback. Market is trying to make a third leg all the way down. So that means I can remeasure everything for the bulls if we come down here. I would have a much bigger structure, okay, for a bigger reversal target. So looks like market could be, okay, this could be also one complex leg, first pullback, second leg, second pullback, and third leg. Then my pullback target, sorry about that, my pullback target that's projected or horizontal is I would buy with a couple of legs back to that. Sometimes you're going to have to see with the price action if market makers or the machines are not happy with these substructures, they can suddenly start to make a bigger structure. So then you shift things around. No, I went flat. I'm flat. I've been flat for a while. I can't do all the talking and the trading at the same time. I lose control of the trade. Sorry, I'm not a superwoman. It's everywhere. Gold, oil, Dow, Russell, Forex. Oh my gosh, I can open a Forex chart all day. I can find these projected targets and structures, and I can just swing all day long. I can swing a couple of days long. You can do it. Cleaner the chart, cleaner the structures, bigger time frames, much cleaner structure. So, but 5-minute chart, I do it all day long. Look at this beautiful. I had a target. Look at this. I had a target for bears before everybody else figured out what was happening. Look, it's impulse correction, impulse correction. Fifth leg fell short. Why? Because bears are in a rush to sell. First correction, second correction, that was the projected target. Actual target, this is it. But it's never a one level. So it's the lowest point to the is the open of last bull bar. The market came in, could not close below 85.75, lowest point to get to the correction 2 level, which is 18 low. That's how you know it's probably trying to make another leg up. So that means this is a small substructure in a building progressing a bigger structure. Maybe you need to recount your legs to get another target. Maybe this is my first leg and this is my correction, is from high to 77 low. Next leg is and correction and final leg before you sell. Final leg ends here. So let's do that. First, maybe this and this and this, right? So what am I doing? From here to there, we broke it. So where are we going? 2. We're going to 2. Hold your runner in there. We even breached. I don't care about this. As long as I get the 17 low, that's great. But what if I counted this? What if this was the first, that's second and final. And I don't know what's going on there. It's already selling. That's great. So my target then is here. I'm going to get rid of that. That. But that's projected. Where's my actual? That's the 4 low to the last bull bar open. I want market to come in here. I'm already selling. This is A, B. It's probably going to make a C, so I can sell again. Hello. Look, I got my target. It actually tested that bar. 7 to 7 literally tested. Look how accurate I am. They're dead on. You'll never go wrong. Look, tested and it bounced. Okay, it's fine. And then came back down. But no bull bars closing. So this is still just a double top. It's giving you another option to sell. This time they're breaking this. So where are they going? Right there. Hold your runner into 83.50 before it reverses. Oh, now you're not an average trader. You're also seeing in your crystal ball the future. And the future says there's a leg 1, correction, leg 2, correction. But where's the leg 3? I'm counting wrong. This is leg 1. This is correction. Leg 2. This is correction. So from the 5 low to 13 high, but I'm going to do conservative. But you don't have to. You can use that. And then is last bear channel open. I'm sorry, bear bar open to the highest high. That's where I'm now buying. And I'm going to swing all the way, whichever comes first. Look, is bar 46 reached. I'm so carried away. I'm sorry. I know you guys are mad at me, and you should stop me. This is actually not a learning session, but Fridays we're a little bit relaxed. But I just want to continue on this. So we go, we reach. They've taken profit. You can see the profit taken. But now we're building above it. So where are we going? Well, if this is the first correction, we're going to the next level. That's it. This is where you're going to take profit. Don't worry about the rest. Just take profit there. Chances are there's a gap there, and that gap is going to slap the bulls down. But you already took your profit with bar 63 high. You're happy as a clam. None of this matters. That's it. And the market comes down. Now it's giving you another structure. But now look, up, maybe down, up and down, final leg. Find the next target from here to there. Right? Right there is projected target, but it's never, there's another one. So here is, where's the last bull bar? Right there. From here, bar 76 open to the lowest low. Lowest low is actually right here, so you should be just about, this is your projected. Lowest low to last bull bar is right around. So if you're selling, is A, B, C, D, that's where you're taking. Look at bar 15. Comes in, gives you a full target, and then bounces. They close it. So if this is leg 1, pull back leg 2, pull back leg 3, where is it going? It's going to the 1 and 2 correction. 1 and 2 correction. 2 is right there. Did we reach this next extension target? Yes. Did we move up? Yes. You can never go wrong. I know your heads are spinning, but I want to get back to the price action now. Spent too much time on this. This is amazing way of utilizing L's wedge trades or structures with finding targets, dead-on targets. I do this every day. This is my go-to trading method. I can tell that we're not done with the legs, or if the leg is shallow and it needs to get follow through or continuation. I can literally see it. And then it made me a patient trader. Sometimes I do stupid things, but I'm able to fix. All right. It's 11:49. I'm going to open the question box. I know you have tons. All right. The GoToMeeting question box is open. Oh no. Frederick couldn't hear me at 10:47. He really needed to restart his session of GoToMeeting. If this happens to you guys and the volume is not there, I'm moving my mouse, but everybody else hears me, just exit and come back in. All right, so you can post your questions. I'd be happy to answer. Oh, that's right. Monday is half day. Market will trade, but will be done around noon. So I don't trade those days. It's go find something else. Seriously. I mean, digging for gold in my cat's litter box is a lot more exciting than trying to trade a half day. Let me tell you. I'd rather lose myself in a litter box. So do something else. Don't bother with that bit. Study, but don't waste your days, times, hours in those days. Oh, wow. Okay, questions. Okay, finally, there are a few. Well, you're welcome, Dennis. I should say thank you, not you're welcome. Well, you're welcome, Bonnie. How do you get negative values like this? So if I have, for example, here, negative values, these are negative values, but let me change that with negative values. And NinjaTrader is a little bit wonky, so you have to, you just add them, literally, by adding a negative, and then like that. That's it. And then save it as a template that you recognize so you can apply. You can make it a default template too. So right now is what scenario that could make you go long. Right now, this is 3 to 4. 1 to 2. It's a complex leg with 2 legs down and a correction. It is second leg, second correction. Either bulls are going to start buying here, and this is going to be a shallow third leg, meaning think about the structure. 0.5 is no lower than 0.3. If you start to see big bull bars, they're probably going to buy. They're going to target it from here, possibly there. Last bear bar starting point to the higher high, that'll be the target. If we take out the 17 low, then the 5 wave, I call that, or the third leg, is not done yet. So you wait for it to finish if you want to buy. Okay, you can't just buy untimely. So it's still building. By the way, it's also a head and shoulders pattern with a neckline. That's a whole different thing that we can study later. That was the neckline they broke. Maybe this is the neckline. Yeah. So there's a neckline. It's also possible neckline. Bears need to break this, okay? Failure to break a neckline, bulls invalidate, okay, the head and shoulders pattern. That means we get up here. So I'm watching this wave 5. What is 5? 1, first pullback. 2, wave 2, second pullback. Wave 5. Why is this 5? First leg. 1 to 2 is your first correction. This is wave 1, wave 2, wave 3, wave 4, wave 5. 3 to 4 is your second correction. This is the final. Sometimes you get this, but this is a one big leg. So then move the 5 here. Doesn't matter. This isn't a correction. It's just a complex leg. Then your target is going to be A to B, B to C, and D. So I'm looking to see if bulls are in a hurry to buy here with a shallow wave 5. That means we're not going to break the 3. Or are we going to get a complex leg? I have 2 necklines. If we break these necklines, wave 5 could extend down here. Get rid of that. So far, this is the horizontal target for bulls. Where is or projected target. Sometimes I do shallow or conservative projected targets like that. But we're extending, so it prevents you from buying too early. So you don't have to scale in down here and be in the red. It just makes you a patient trader by counting the legs or the waves. I am. Bears are still trying to break some kind of this key area, but I don't have a confirmation. If they fail and we close a bull bar above this key level, that means we're going to get back up here very quickly. That means we are always in short, but this is also a pullback, always in long. So we're in a trading range. I'm looking to see if I were to sell this, I probably would have. I would be looking for a break of these lines, moving underneath the EMA, 1 hour EMA, and then test of 50 EMA on the hourly chart, which is 92.50. That means this 5th wave or the 3rd leg could extend down here. Here's another thing. Maybe this is a one big complex leg. This is the first correction, and we're actually in the 2nd leg, and we get a 3rd correction, and then we get the final leg. Then you're going to find your target. So none of this. You're going to get the target there. Then towards the end of the day, we're going to look for a reversal back up since it's a one big trading range. I just stretch the X's, or you can use this, which I hate using, but you can also use that. And I use with control, I hit on the keyboard first control, and then I drag up and down, left and right, any direction. Okay, instead of using this right there. So if you hit the control key, then you can move it around. I'm gonna have a session. Okay, don't talk about this out loud. I don't want Al Brooks or anyone to hear this. I'm gonna step outside the Brooks trading course. You can kill me later, but this is for your own good. I'm gonna use this method of Al's wedges and target finding, coupled with Al's major buy and sell zones, aka supply and demand zones, and what to look for, which bars to sell, which bars not to sell, which bars to buy, from which supply zone, which demand zone, so and so. And I'm going to couple all that, and I'm going to give you guys homework. Instead of futures charts, I'm going to ask you guys to look at several different, like at least three different Forex markets in a higher time frame, minimum 1 hour, and then find me great structures and projected targets where you can swing into. I'm going to make a session out of this. Maybe it would be that bonus learning session they can schedule, that I could have it all for myself and brainwash you people. Maybe Richard can think about that, and if he wants to, schedule it, I'd be game for that. You can use this path. I assigned a hotkey, F6. They're still selling. It's a bear flag. Spike is pullback. It's trying to break this area to get a much bigger leg down. So there's something here that the bears see as a target. Let's find it. Let's find this. Let's get rid of all of this. Keep the chart clean. There's something the bears see it other than the trading range lows, right? So what is it? Maybe this. Leg 1, pull back, leg 2, pull back, and a complex leg up. I'm trying to see, maybe here, right here. Oh, look, that's why we're coming down here. Look at that. Or I can see here. Look, oh my goodness. Okay, I'm gonna get rid of this neckline so you can see it. That was the projected target. But projected targets came a lot earlier than the horizontal target. If the bears actually break this with a bear body or two, they can actually swing into this. This is their actual target. How did I find this? Leg 1, pull back, leg 2, pull back, complex leg up. And I had another one. So I'm not so sure I'm actually calculating right, because if this is the last correction, so now I'm going to do this, maybe this right here is my first leg, first pullback, second leg, second pullback. I ran out of space, and that's wave 5, third leg. I'm trying to find a way what the market sees that I don't, what the machines are seeing. Starting point, first correction, to the ending point, right, is maybe right there. They already broke it. They broke it retesting and selling. So that means they're going to here. That's 1 to 2, 3 to 4. Market is trying to sell into this, but they need to break. They have to keep selling and not make a double bottom. This is still holding. Alternative. You see, I'm finding a bunch of nested ones. That's advanced. But as your eye gets trained, you're going to be constantly spotting these. What if this is the line? Some machines are seeing that. What if that's the line? Well, we broke that line. We went back, retested. We're still selling. If actually bears, if and only, break that 17 low, that means they break this projected line. We could get down here so fast it could vacuum down. Why would it vacuum down? Why would it go down so fast and then bounce there? Well, it's a trading range. If you actually measure the entire trading range, divide it into 3 sections, if we come down here, that's where the buyers are. Let's do that exercise. So I'm basically pulling out all the guns I have and putting it together, finding ways where market could reverse back. So there's a trading range here, give or take. I'm going to say this is the low, this is the high. Okay. That's the entire trading range I'm interested in. I'm going to divide it into 3 sections. I'm also going to extend it to the right. Look where we are. Do nothing. They kept selling at the upper third, and we might actually pull in here before we find buyers. So market suddenly, if it breaks this line and the 17 low, that leg can extend all the way in here before going back up. So you have to be patient here. That's what some of the machines are seeing, a huge trading range. Okay. Evidence is there. Sellers at the upper third and buyers at the lower third. Sellers again selling. We're at the midpoint. What does it need to do to sell into the lower third and buy again? What does it need to do? What does the market price needs to do right here? Don't say, I don't want to hear, I want to see a price point. A price point of exact price point where market needs to do something to sell into here. What is that price point? It's right in front of you. No. Price, like 400, I'm sorry, 48 something. What is the bears? What do the bears need to do to move down here? They need to take out the midpoint, mid-range, midpoint. Upper range, middle range, lower range. Where's the midpoint? That's, by the way, 2. Right there. So in order to keep selling here, bears need to break that. They could sell here, bounce, but they could also come down here. Until they hit this, I'm not going to buy. But can they actually reverse it here? What if we just fail to take out that neckline and the bulls show up? Can we actually go right back up here? I don't know. I don't have a good buy signal bar yet. I have a micro wedge, 26, 29, and 31. But bar hasn't closed, and I don't have a good buy signal bar yet. In 2 minutes and 5 seconds, this bar can plunge, and if I buy it right now, I could be hurting. And the bears actually close below that mid-range of midpoint. They're going to target this boundary line along with my target zone. So this seems like a target for bears as they're trying to come down further. So I have to be patient. If the bulls close a strong bull bar and showing me that this is a double bottom neckline and they want to go all the way back up, or at least go up here and then go back up, yeah, that's fine. They could do that. but where are the bull bars? Are we done with this leg being so short? Where are the bars? What happens when the last leg is shorter than the second leg? You get a truncated wedge. What does a truncated wedge mean? That means the opposite side is in a hurry to reverse the market. Do you see any hurriness? Nobody's hurrying up to do anything here. There's no urgency. I just made up a word. Hurriness. That's not a word. I don't think that word is in the dictionary of any kind of English. So there's no urgency to reverse this back up. So we could suddenly break that middle range midpoint line and sell into here. And that would be job well done for bears looking for extension down. Oh yes, always. That's why I have a very colorful 15-minute chart. Okay, so what I do is every morning. Here's what I do. Say this is the new morning, right? And midnight open. From 7 o'clock, that's 8. This is the 7 o'clock bar, and we made a little low. All the way to the midnight, okay, high. I find my range. And then until 9:30, I find my Globex high and Globex low, okay? And in that, this is Asia. I measure the Asia range. I find and I mark the Asia midpoint, and I find the midnight bar, midnight open, brand new day, okay, for US. I take that and I mark that. Just like I did here, look. That's the first chart I chart when I come in the morning. I find a 7 o'clock, 7 p.m. to midnight. I find the high and the low, box it up. Yellow is the mid-Asia, green is the midnight open. This is my key level. If market is below that, I look to see to trap the bears underneath the Asia, and I see a big bull bar closing above. That means we have trapped underneath Asia all the bears, and now I have a signal. Market is moving above a key level already in London session. I'm going to buy, and here's what I'm going to do. I'm going to look for 1-to-1 target or 2-to-1. Here's 1-to-1. We failed. When my 1-to-1 doesn't reach and the market is selling, I'm going to target, okay, because we can also trap. This is London session. They love to trap at the low of Asia and the high of Asia. Now, I can still use the Asia 1-to-1, Asia 1-to-1 as my targets. If we close below, if I'm selling, first sell, second sell, I'm going to take profit at the mid-Asia. But if we have a closed bear bar, I'm going to sell into the 1 hour minus, which is bear 1 hour target. Look, we came in, and now we're reversing. Back up, okay? So I use it all the time. We've been oscillating around the key level all day today. So we have a bull flag, wedge bottom, higher low. Can bulls actually finally show up? Well, let's take a look. They're showing up. Okay. So now we're reversing. I get this bull bar. You can jump in and expect this gap to be closed. In a trading range, gaps always close. That's your target now. That's the first target for bulls. If we get above it, that's going to be the next target. Now, I don't care about this anymore. This one's holding. I need the bull bar. That's great, but they can still sell. This is still a bear flag. But I get a next bull bar. They will buy the pullback once they get above the EMA. Then I can go long. I didn't really buy anything. I still need a second bull bar. Okay? Then I expect boundary line to be tested and the market to move higher. What if we don't get the second bull bar and suddenly it comes down? Well, you haven't bought anything yet. You're still waiting for the confirmation. This is an inside bar, 32, which is a good sign. It closed a semi-strong bull bar, but it's a very visible upper wick. But it just closed slightly above its midpoint, possibly. But it's not all that great to buy above it. But you could say is, what if this was high 1 is high 2? I don't know. I don't see a high 1 there. But since we came down, that's the first high closed. That could be the high 2, but you see how unreliable it is. So in order for this to become reliable and the bulls to actually move into this target right here, what do you need? You need a second bull bar. One more bar to seal the deal. Then we're going to go higher. And getting above the EMA, closing above EMA, we might be already getting into always and long because of this leg, but it has to really close above EMA. So 33 is also a messy bar. I don't like it, but it is a buy to close, gap up, so you can buy and expect a leg or two up. 33 gapped up. There's leg 1, pull back, leg 2, pull back, leg 3. There's a small wedge completion. This one gapped up, although overlapping, but still it's a gapped up body. So bull's probably going to buy and look for a second leg up. It would be better if we can actually close above EMA. I don't like the upper wick of 33 because bears are always looking for a double top at the EMA and sell again. So yes, the second bar is nice. Traders already bought above 32, thinking that's high 2. Or high 1, high 2, and they're looking for a swing into here. See if I can actually find this. Bar 25 is your magnet. Either it's low as early as it's low, or the high of 26. That's your first target. 4. 1, 2, 3, 4. Projected targets, if we can get above it, then we're going to move into here. So let's see if we can actually swing this. Those are, it comes from a free volume profile, point of control, where sellers are there and waiting. This area, sellers were strong. So it's telling you when it gets there, you will be greeted by sell orders, and most likely it's going to pull back. Okay. If it actually breaks a strong sell zone with strong bull bars, that means you have a measured move target to the upside. Look, they sold once, so I don't know how strong this area is now. When we get there, it may not be all that strong. So the market is also trying to get there. So we need now is seal the deal, always in long bulls. Market might have been already in, but this made it difficult. Now, how do you know we're always in long, not always in short? There was a demand zone here. Did the bears break the demand zone to keep always in short? No. Are we bouncing from it? Yes. So we are becoming always in long. Better if we actually close above it. Where are we going? To a supply zone. If the bulls break the supply zone, that means we're even more always in long into the next supply zone, aka strong sell zone. That's how I know whether I'm in always in long or always in short, and that's how I scaling or scale out. Now so which mother bar am I using? Which range of a mother bar? Give me a bar number that we are in, the valid one. There are several ones lined up, but I'm using one of them. Which one am I using? It's definitely not 31. Why is it not 31? Who's going to answer? Why is it 26 valid? One is the 26, but not 31. What do you need to do? What do you need to see on the chart in order to eliminate this one and use the new one? The older one needs to reach its target before, okay, you can, okay, say that I'm going to be using the new one. Did the 26 reach its breakout targets ever? No. If you actually measure, the first minus 23 is right here. Did we reach it? No. So that means this is still valid and you should not be using that. Plus, why would you want to use it when this is still valid and large, so your targets are larger? Okay, so eliminate that. If this was to come down and a close inside, then I would have said, okay, use the new one, which is 31. That's the rule that you have to remember. Oh, crap. Sorry, guys. I was trying to scalp there and leave a runner, and I wasn't fast enough to. I put a chart order right there. Well, I don't have it here. Using the right click. Instead of scalping one, I ended up scalping two contracts and just got myself out. I'm going to buy again. Okay, I'm back in. The boundary line is where bulls want to go and test probably. The first bar 25 is where they're trying to go and test, most likely. We might need a pullback here. It's a 10 point for bulls also. They're taking profit here. But that's, I'm sorry, 9. So here's 10. They're trying to get to the 10. That's it. You should scalp the boundary line and leave a runner into the target right there. Higher high is, and the first bear bar is open. This area is where bulls are targeting. But have we tested the mother bar 26 trap zone? No. Probably they will be taking profit there and we will come down. So you can actually use the trap zone, layer that, and find a trap zone and see if you can maximize your swing into that. Trap zone begins around 89 to 111. So market is trying to reach there. We might actually start to get sell orders stack here, there, there, there. So it could just go there and then come back down. So I'm going to hold it. That's why I think we're going to test the high of 26. Beautiful buy to close. I don't know, Nunu. That's a beautiful name. Which bar? I mean, if you're using MT5, I think I have MT5, but I've never had the bar numbers there. I'm sorry, I just saw your question. That's something you're going to have to search Google. I have no idea. If there's any MT5 users here, MetaTrader 5, maybe they can help if there's any bar number indicator available. That's the pullback from the 66%. As long as we stay above the midpoint of 26, that's just going to be a pullback and we could go higher. You can also divide that range into 3 sections and pay attention to the 33 and the 866 and get rid of all the others. If this is too crowded for you, just pay attention to the 66, 33, and midpoint, and then the extensions. Can bears actually sell this? Technically, they can have a complex, 2-legged, 1 big leg. So they're still trying to get the fit. If we start to take this out, there will be some buyers here. It could come up here, come down here, go up, exit out these bulls, before coming back down. So watch out, we got a really nice bear bar here. If we're not able to get above the 66 or 79, this is the pullback. And bulls can still buy because they're disappointed because they wanted to see market going up there. And you got a wedge here. But the problem here, if we take out the 31, there will be buyers here still, okay? And they will buy even lower as it comes up before coming down. They will exit out and then they will become all bearish. Because to me, originally we expected bears to bring it here, but this was a good reversal. I made money there, but now I'm losing money. So what am I going to do? There's a trading range here. I'm going to buy at these lows. So I'm going to try to break even before it comes down. So trading range lows, I will buy and I will exit. Break even. So you got 1, 2, 3 strong 3 bars, bull bars. Buyers here underneath 33 already activated. They're trying to push it high so they can exit out. Maybe they bought above, they buy below, they want market to get to here. Or they're going to buy down here. So I'm going to get rid of this. So that's too strong now. You're going to have to wait now, market to come down. It could actually extend out, but there are some buyers here. And they're disappointed. So they will buy and they will try to break even. So the break even price is still somewhere up here. But the break even to minimize the losses. It would be better if the market can go and test the 33 high or the close of 34. That was the actual break even. Or one tick above 34. But strong bar, bears are selling. They want to take out this low. So it's surprising change of character here. And 66% holding. Bears want maybe another leg down to have a complex wave 5 or the third leg before it actually reverses back up. So we could suddenly come down here. Watch out. We tested the 23 low. That's a breakout test area. But this made things difficult. We are not always in long yet. We try to become one. Buying here is at the demand zone, but bulls need to enter again and prevent this demand zone from, or the support from breaking. If the support breaks, then we're still always in short, and we're going to come down here. But they're still buying; they still want to break even. So I'm one of those. I got dumbfounded there. So I bought underneath 33, and I'm about to get break even. Not break even, really. Minimize the losses. Loaded up there is a lot more than what I had as a contract wise. So now I'm holding one contract still. I want market to now go to 1150, which is the close at the minimum, the close of bar 34. So you can fix anything if you know where to enter correctly. So if you measure again, so here, say you were stuck here, you bought that. You bought underneath 33. Look, that was well done by bulls. Now, technically, they actually closed that body of bar 36 above the midpoint. So they have a high probability to get up here. They will try. So I'm going to wait to see if they can actually do it. And we get a nice second leg up back into this area. we get a strong bull leg, I'm going to buy the pullback. I'm going to load it up, in fact, and I'm going to make a lot more money as price gets in here. So we're still swinging into here. So I didn't panic. I fixed my bad trade. I minimized the losses. Now I'm making money again. So I'm holding onto my let me see if I can actually show you. Hang on. I'm going to try to show you, but I am in a trade. Here we go. Now I'm risk-free. Just one contract. Okay. So here we go. I want it to go up, but I'm risk-free. If it comes down and gets me out because these bulls are actually getting a break-even exiting and I have no other chance, and this is actually bearish market, that's fine. I welcome for market to come and run my stop. I'll be making money there. So I'll be making 3 ticks. Not bad. So I'm okay with that. But I'm not losing anything because this has a potential of coming down here also. So this was a break-even event. If that's what it is, I'm not going to go against it. I'm out. So I'm done. Now it can still go and I can still enter, but you see how that break-even happened? Where is the bull bar? That bull bar should have closed right there. It didn't. So this is a break-even event and the bears can actually sell into here. I don't want to be stuck in that. I walked away with money here. So how bad can life be, right? Just because they kick me out. I see another bull bar, I'll buy that. But they have to show me. So people ask me, why do you scalp? Not that I want to scalp. It's just that that's what market does. What can I do, right? You're in a trading range. If market wants to scalp and it's not really swinging. I was swinging. What happened? I got interrupted. Am I going to sit there and cry? No. I'm already stuck, so I'm in a fix-it mode. I'm going to fix it. I'm going to look for a second leg up. But if it's not happening, I have no way but to take the money and exit out. So, and if there's another opportunity, I jump on it, but it's not there yet. So we're going sideways. Possibly sideways and up, but it has to work. Oh, sorry about that. Oh my gosh, it's 12:34. I am so sorry, Brad. I completely forgotten about Brad's session. Okay, so I'm going to end the session. You guys are, please stay. Brad will join. I apologize for the extension, 30 minutes, 34 minutes, but I'll see you guys next week. Be safe, everyone. And one thing that I also forgot to do, encyclopedia, is I'm going to try to go and look at some charts now, and then I'll try to post a few.
Market is forming a trading range and it's in breakout mode. Give me just 1 second here. Today we gapped up and we formed an opening reversal, consecutive bull bars breaking above the prior day's high. And the bulls, they tried to get a second leg up after bar 3, but instead of getting the second leg up, there were more buyers than there were more sellers below than buyers. And the bulls ended up trying to buy below 3. They got trapped after bar 4 and 5, and they gave up on 6. 6 made the market always in long. We got 3 pushes down. The bulls tried to rally, but it ended up forming a double top. And now the market's in breakout mode. It's deciding, Are the bears going to get the downside breakout test of the high of last week, or are the bulls going to get a reversal up? At the moment, pretty neutral. If I had to guess, I suspect we're probably going to go sideways and bounce. I think we're always in short based on being below the moving average, but we're barely always in short. And that means we're probably going to go sideways. I suspect we'll probably test around the bar 25, 26 area, but not clearly all that bullish. Give me just a moment. Market's still going sideways. Again, overall, tight trading range. Let me turn the bar counter off and turn it back on really quick. So we're in a tight trading range. Breakout mode, probability close to 50-50 that we get the breakout up or down. Random, kind of a random question for those of you in Discord, or I'll turn the screen on. So breakout mode, probability close to 50-50. I think it's still always in short, but I think it's barely always in short. Maybe 53% chance we break to the downside, 54% chance. Even that's probably pushing it. And the opposite for the bulls. I think we're going to try and test up here. But tight trading range, if the probability was high, we would not be doing this. So I'm curious, for those of you who, has anyone in this group used multi-charts? Multi-charts is a platform, I believe it's a charting platform that can connect multiple brokers. If anyone has, just comment yes. It's more or less, I'm more or less just curious. But tight trading range, you can take the buy above 39, but it's low probability. Probably going to go mostly sideways. And again, I don't have anything really to say about multi-charts. It's just a platform that can connect several different brokers to one platform, and you can trade it. So a lot of traders, and I think you can do the same thing with NinjaTrader. Some traders use interactive brokers, and they'll trade a NinjaTrader as the charting platform, but use interactive brokers, something like that. So Sam, do you like multi-charts? I'm thinking about trying it out just to see kind of how it operates. Thinking about trying it out just to see kind of how it operates. So I'm going to adjust something with GoToWebinar really quick. Someone asked if I've used TradingView. I've never used TradingView. One thing I think is kind of neat with TradingView is you can replay a day, but instead of going, you can go bar by bar. So you can just kind of like, it's completely blank and just move to the next one. It's kind of a neat feature. But I've really only ever used TradeStation. I've used interactive brokers a time or two, and a couple of Forex markets, or Forex brokers. What I wanted to do is add a chart here while the market's going sideways. So why the advantage of multi-charts? One of the advantages to, and there's several ways you can do it. Al trades different brokers for different reasons. And if you've listened to Al long enough, you've heard him hint at some of those reasons. One is no matter how good of a broker you think that you have, there's always added risk. And the point with that is, let's say you're trading TradeStation and you buy at the market, and all of a sudden you're long and something happens with TradeStation, you can't exit the trade. And hypothetically, let's say your orders were canceled, so you're long, but your stops aren't in the market. And let's say This is like a 1 in 1,000%, very low probability chance of happening. But let's say you're short, let's say you're long, and the market starts going down, and you can't close the trade, and you don't have any orders in. So you're short the E-mini. Well, if you had a different broker, what you could do is, if you're long, you could at least go short on the E-mini as well, and you would net out your trade. Now, obviously, there's other more realistic reasons to have two different brokers. If one stops working, you can use the other. And it's just really good to understand multiple brokers. So the bulls trying to get the upside breakout of a triangle and test up to the high of 25. That happened to me one time with a Forex broker. I won't name the name, but they're pretty popular. And I was in a trade. It wasn't a large position, thankfully, but I was in a trade on, I think it's like as long the euro dollar on like a 15-minute chart. And I remember the exact situation, but I was long, and all of a sudden I got kicked out of the platform, and I tried to log on the app. I could not get in the app. It just kept loading, so the wheel just kind of kept spinning, wouldn't let me in. And then I tried to call that broker, for the Forex broker, and they wouldn't answer the phone. And they probably wouldn't answer the phone because everybody else was trying to call them. So for about 20 or 25 minutes, I could not log into the platform. I could see TradeStation's Forex market going up and down, but I could not do anything with the trade I was in. I was kind of stuck with it. So bull breakout, are we always in long? I think we might be always in long. Strong enough bull bar, probably going to go at least a little bit higher. But you know what I'm going to say. The bulls need follow through. Another thing that a lot of traders do is a lot of traders do not keep all of their trading capital in one brokerage account. And there's several reasons for that. The other thing that a lot of traders do is, let's say they have $50,000 of trading capital, or pick a number, 50,000, 100,000, 30,000. The number is really irrelevant. But what a lot of traders do is, let's say I'm gonna trade, let's say you're gonna trade $50,000 of capital, and you're gonna risk. Al says never risk more than 5%, or never risk more than 1%. Most traders should not risk more than 1%. So $50,000 times 1%, that's $500 of trading capital. What a lot of traders would do is they will think through, instead of putting $50,000 in the account, they might put $20,000 or $15,000 in the account. They're still going to treat it like a $50,000 account, but they're going to keep their money at a bank, maybe in treasury, something that's accessible. And that way, if something happens to the broker, let's say I'm long, and then something crazy, and again, this is just purely hypothetical, but let's say you're long and something crazy happens, and instead of losing whatever that percentage was, let's say you lost 10 times whatever you thought you were going to lose. That is a possibility. Now, the other realistic reason to keep a smaller amount of capital than your total capital is it protects yourself. It protects yourself from you. So it's really easy for someone to be, especially when you're starting out, to be too impulsive. So if I was starting out and I was going to trade with, let's say $20,000 of starting capital, I would not put all $20,000 in the account. I would put much less and prove to myself that I am able to trade that money. So you can see what's happening on bar 41. We're testing back up to the high of 24. We're testing up close to the low of 25, and traders are selling. So obviously disappointing for both the bulls and the bears. Disappointing for the bulls. The bears, they see a wedge, 1, 2, 3, and they want a second leg down. So let's see what kind of follow-through selling we get so far. Looking good for the bears, and we may go a little bit lower. But 2-bar reversal. I think it's okay for the bulls to consider exiting below 42. Not a good close for the bears. Increases the probability that 41 will get a second leg up. But if you're a bull, obviously you're disappointed by 42. Some bulls disappointed 41, considering getting out, break even after 42 at the high close of 41. Other bulls, they see it as a breakout pullback buy, and they want a second leg up to the high of 25. I think we're probably going to go at least a little bit higher. Bulls, they really want a bull breakout of a wedge. So a wedge, 1, 2, 3. They want a bull breakout up here and a measured move up. But we need a strong breakout, otherwise probably won't get it. Someone asked, can you please name other platforms other than Ninja and TradeStation? There's a lot of them. I mean, I would just Google trading platforms, futures trading platforms. In general, I would go with platforms that are relatively known. That's a good rule of thumb. But there's all sorts of them. Ninja Trader, TradeStation, Interactive Brokers, I think CQG. And again, I'm only familiar with really TradeStation, but there's plenty of them that they're all going to be pretty competitive and credible. But you have to certainly do your own due diligence, and it also varies on where you live. One of the annoying things about TradeStation is, and they finally made a way to fix it, but I used to have the bars, for whatever reason, TradeStation, and I'm trying to get them to answer it. TradeStation, my other trading computer updated, and there's something wrong with the platform, which makes me, there's something wrong with this computer that I have. And this platform here, when I updated it, I cannot open my workspaces. So this is an older workspace for the trading room that I have. It's not the most current. But anyways, the point I'm making is, see how these bars are faded? Used to, when you change the theme, and before I go into that, breakout, pullback, buy, high one, bulls want to break out in a second leg. So I think the bulls are trying to get up here, but they need to break out of a wedge in order to get there. If your bars are white and black on TradeStation and it's hard to read the data window, go to File and change the themes. So File, Theme, change it to, I think it's on, it might be maybe Classic, I think it's the one that it normally is. But if you change it to light, that makes it easier to read the bars. And here, that's why I'm changing these back to black and white instead of a grayish black, so it's easier to see the bars. Sellers above the high one. Bulls trying to get follow through in a test of the 25 high. Follow through buying 46, 44, and 45. Bulls, they want a bull breakout and measure move up. Test of the high of 25, maybe the high of bar 8. Strong enough breakout, probably buyers below 45, but a big tail at resistance, the 26 high, so not really ideal. Not clearly always in long, but there might be more buyers below 45 than sellers. And because it's a wedge, 1, 2, 3, we may get a small second leg up. But the bulls, they need to get follow through buying. Otherwise, chances are we'll go probably sideways. So I just got off the phone with TradeStation. For those of you that have, there's a, it's funny, I feel like when I talk about TradeStation, I always say certain like bad things about them, but I really like TradeStation. And I want to show everybody an issue. Let me just pull up the matrix. By the way, we're starting to go sideways, and that's my concern right here. The market's not clearly always in long. What I wanted to show is TradeStation, whenever you use it, and by the way, you have to be on the, if you recently updated TradeStation in the past day or two or three, TradeStation rolled out with a new update. It is, so if you go to the help about TradeStation, it's version 10.00.07.1204. And the problem is TradeStation, you can enter the quantity. So if I type in the ESH, what happens is, and this is simulated, but you'll see how all these quantity numbers here of just random numbers. And what happens with it is for whatever reason, TradeStation starts to freak out because there's all these numbers here. So the workaround, I was told, is go to this box, right click on the box, and click remove. So right here, click clear. So when you clear it, it kind of like it refreshes TradeStation. That was the computer I've had an issue with this for most of the day. My other trading computer, it was so slow, I hit a market order and it took about 4 seconds to appear on the price ladder. So if anyone's had issues with TradeStation, that is a workaround. So someone asked, please explain how you know buyers will be below 44 right here. I don't know that buyers will be below 44, but here's my thought. I thought the rally up to 45 was strong enough for a second leg. And because of that, I thought the odds were that there'd be buyers below for at least a bounce in a small second leg. But then here, bad high one, probably sellers above. And this is just a mess. So to me, we're probably going to be in a trading range for a good portion of the day. Someone said TradeStation's been around forever. You know, it's funny. A couple of years ago, I was on a flight, and right before the plane, I opened my computer to update. I was trying to save a chart on TradeStation quickly before I forgot. Bull bar, probably buyers below, but this is not really, it's not clearly always in long. This looks like a leg in a trading range. Anyways, I was saving a chart, and the guy looked at my computer, and he kind of laughed. And he said, is that TradeStation? And I said, yeah. And this guy, he laughed, and he made the comment that he helped build Trades. I don't know when TradeStation came out, but he was talking about how he was on the development team far before they called it TradeStation. And he was laughing because he's making the comment just how old TradeStation actually is, or how long it's been around. So 48, bull bar, but the bulls, are we always in long? I think we're barely always in long, but probably needs to go higher. Yeah, someone said they used TradeStation in 99. I believe it. See when TradeStation first came out. Yeah, I remember when it used to be a monthly subscription. I remember hearing about that. TradeStation used to be really expensive. Okay, I think it was like 100, maybe 300 a month. And that was just to use the platform. I remember to just trade simulated, I think TradeStation I think used to cost, and this was even 6-7 years ago, to trade on simulated, it used to cost like $99 or $199 a month just to use it. Okay, someone said Google said 82. That sounds right. So now that I'm done with figuring out why TradeStation is not working, I want to look at a few things. Bulls trying to get the upside breakout. Here's the daily chart of the euro. Strong enough breakout, we may get a second leg down. But the bulls, they want to test up to this close. So we have targets above here in bar 8. As far as the daily chart goes, daily chart, obviously we're in a trading range here. And I think we're probably going up to the March 2022 high. Trading range testing near December 28th from last year, pulling back a little bit, but with this magnet not far above, I think the market is going to have to get there. I think it's going to be hard I don't think a lot of bears are going to be all that eager to sell just below an obvious magnet, but we could take weeks to get there. Bulls, they have a small gap here, maybe a negative gap here, but not really all that clear. 48, it'd be ideal if 48 could close above 47. Well, let's see what kind of close that the bulls are able to get on 48. I want the market to break out to the upside, but I'm not all that convinced that the market is going to break out to the upside yet. Someone asked about crude oil. Crude oil on the daily chart. Here's crude oil. Spike, pullback, we've been channeling down, going sideways for a lot of bars. It's basically a triangle, so breakout mode, 50-50. 5-minute chart. We had a very strong rally on the 5-minute. Whenever you get a rally like this, it's very parabolic, and you start to get big bear bars closing on their lows. A lot of traders will wait for a couple of legs before buying at a minimum. And here, we just broke far below the moving average. So that was too much selling pressure. And it ended up being a climactic reversal. So we had a buy climax and a sell-off. So it's basically a 2-bar reversal on the daily chart. If we look at a maybe 30-minute chart, it might be easier to see. So buy climax, strong reversal, second leg down. 5-minute chart, bar 48, follow through, but tail above 48, overlapping. 48 is an inside bar with 37. Whenever you get an inside bar, it's a trading range bar. And because of that, there's added risk that the market is going to go mostly sideways. Trading range inside bars are triangles, which are contracting trading ranges. So probably more sideways trading here. Someone asked about a 5-minute chart of crude oil. We had a sell-off and then trend line break, but the bulls quickly lost control. Here, strong enough sell-off for a second leg down, so this rally was a trading range, and then the bears got their downside breakout and a small second leg. Here, consecutive sell climaxes. What about buying here? Well, you might, but it's 1 bar above the moving average, and my only concern about crude oil is this. I think we probably will go a little bit higher, but this is a lot of damage caused by the bears. So we had a similar situation like this a couple of days ago, or really yesterday. So yesterday, strong sell-off, big bull bar. It's enough of a bull bar to make the market a minor, strong enough to get a small second leg, but it's a minor reversal. Bulls got their second leg that went outside, that broke to the upside and then reversed down. And then you can see on crude oil, sell-off, what do you think is going to happen? Probably breakout, pullback, second leg up sideways, and then a second leg down. So I'm not convinced that the bulls are going to win this. Just look at this sell-off. Do you really think the bulls are going to get an endless pullback? Probably not. Now, what about the 5-minute chart? Well, where are the bulls? They had a chance on 41. They failed on 42. They tried again, 43, 44, 45, and the market's going sideways. Is this the kind of market you want to be buying if this is going to be a bull trend? No. So if it's not a strong bull trend, what is it? The leg in a trading range. Trends. So trends evolve into, think about a trend. We have a bear trend here, and what does it take for the market to become a bull trend? You have to have a trend that evolves into a trading range, and then the trading range has to evolve into an opposite trend. Right here, we're probably in a trading range. So what has to happen? the bulls, they have to make the market into a bull trend. And a lot of times, the bulls get really close, like right here, and you start to think, okay, maybe the market is in a bull trend. Maybe this is a bull trend, and this is going to be the start of the upside breakout. And what often happens is, instead of getting the upside breakout, it fails. Like right here. So we had this bull breakout, 18, 19, 20. Strong enough rally that you're probably going to get a second leg. But is it always in long? No. It's enough to make the market a trading range. It's enough to end the selling and make it a trading range. The trading ranges can fall below the prior breakout. Market's going sideways. It's still going sideways. The bulls, I'm trying to fix the scaling. There we go. The bulls, they tried to get the upside breakout here and here. And what happened? They all gave up. That's my concern about this. Maybe an endless pullback. But when I look at this rally, I think to myself, yeah, that's good, bulls, but show me more. Show me the upside breakout. Show me the confirmation that this is actually going to be a bull breakout of a bear flag. That we're actually going to get this. And right now, I'm not convinced of that. And that's what happens with a lot of traders. What they end up doing is, instead of buying early here or above one of these bars, instead of getting in early, hoping for the endless pullback, they miss all of this down here. And then they start to get worried that they're going to miss out on the upside breakout. They start to get worried that the next couple of bars are going to break out and go up here. And if they don't get in right now, they're going to miss out on the breakout. But the reality is, what are you missing out of? You know, what is this a breakout of? Breakout of what? It's not even breaking out of the most recent major lower high. If this is going to become a breakout, there will be plenty of time to buy. Buy bull closes, buy consecutive bull closes. But right now, I'm not convinced. And to me, that increases the chances that we test back down here. A lot of bulls don't want to buy here because they think they don't want to sell here because they think the market's going to go higher. And if I'm a bear in a trading range, I want to wait for the market to get extended. I want to wait for the bears to become exhausted. And if they become exhausted, I've got a better chance of selling and making money. When I'm trading crude oil, I just look at the chart. So someone asked, should I trade, the RTH or the day only session? And for me, any market really besides the E-mini, if I'm going to trade it, I just trade the time frame. So if it's a 5-minute chart of crude oil, it's a 5-minute chart of gold, I just don't give it a lot of thought. That's just the chart I trade with. So here, bear breakout, second leg down, strong enough rally, might be always in long, but I think the bulls need to see more. So I would just trade that chart in front of you. Bulls getting above 26, good for the bulls. Bull breakout, 41, sideways, 42, 43, rally, sideways, and now we have another bull breakout. At a minimum, the bulls need this bar to close on its high. To me, good bar 50, but a little bit disappointing. Why couldn't it close? It's good that it closed above 48 and 47. But why couldn't it close above 25? And why is there a tail above bar 50? Those reasons make me think that this is going to become a bull leg in a trading range. But whenever you have subtle gaps here, maybe here, there's added risk that you get an upside breakout. I'm not long at the moment. I'm looking to buy, but I want to see a stronger breakout. So my concern here, if I haven't been clear, is this could be exhaustion. Bar 50, makes you think the market's always in long, but then the next bar 51 closes on its low, and you think, well, wait a minute. Maybe it's not always in long. Maybe the bulls needed one more bar after bar 50, and they failed on 51. That is the challenge with trading ranges. Trading ranges always try to get you to buy too high and sell too low. Now, if the bulls can get a strong follow-through bar, that would make life easier. But if I had to guess, 51 will be disappointing for the bulls. So it'll probably be some sort of either small bull bar or bear trend bar. I doubt it'll be a strong bull bar. Just ask yourself, if the market was clearly bullish, why are we 3 minutes into the close of bar 51? Why are we 3 minutes into the bar formation of 51 and we're right at the open of the bar? And that's because there's not a lot of momentum. There's not a lot of eager bulls buying up here. A lot of traders are on the sidelines deciding what they're going to do. And you have bears trying to prevent the bulls from getting their strong upside breakout. The bulls can still get it, but right now, a little bit disappointing. 50% here down to here. So we're right at a 50% pullback midpoint of the day. What about selling below 51? You can certainly sell below 51 to exit longs, and it's pretty disappointing close for the bears. But as far as selling 51 to go short, that's a pretty tight bull channel, and that will limit the downside. Probably more sideways trading than a strong downside or upside breakout. A lot of times when you're trading, if the market, things are not going to be all that clear. And if you're ever confused, it's typically better just to wait and do nothing. I think it's okay to get out of longs below 51 and wait and see what we get. Some bears will sell below 51, betting on a trading range, but not a great not a great sell signal bar. Probably going to go more sideways here. Others, they'll wait for a strong downside breakout before selling. I think the market's always in long. You always in bears that got out below 51 technically buy above bar 52, but not really all that clear. It's always in long, tight bull channel, but you're right at the top of the trading range, and that will make it more difficult for the bulls wanting to buy here. Those bulls that are buying are hoping for a small pullback rally. But my only problem with buying here is look to the left. You're buying high in a relatively tight bull. You're buying high in a tight trading range. I won buy, but it's basically a triangle. So you have a doji inside bar on the 60-minute followed by another inside bar. This whole thing's a triangle, and we broke above it here on the recent open of this hour. But for the bulls, they're trying to undo what happened over here. The bulls want an upside breakout. But look to the left. This is clearly a trading range. And if you're buying up here, you're buying high in a trading range. So really, there's one reason. Who can tell me? Why is buying high in a trading range not a great idea? And answer it from a math perspective. Not because you shouldn't buy high in a trading range. That's not the answer I'm looking for. Not 80% of breakouts fail. Okay, risk reward. Steele got it right. So risk reward is the issue. So Steele, let me ask you this question, since you're the first person I saw that said it. If the risk reward is the issue, how can you buy high in the trading range? Not scale in. What can we do? Okay, wait for a pullback. And by waiting for a pullback, we're improving our risk reward. What if we're already long? So if I'm long, if I buy above bar 52, instead of putting a stop down here, what is something I can do? Move stop up, exactly. Small pullback trends always look like trading ranges. And what ends up happening is you have traders get squeezed. What's the one thing? Look from the perspective of the bears. What do we see here? So what do we see about the bears all through here? There's one thing when I look at it from the bears' perspective that stands out to me. Who can answer that? Limit order bears and stop order bears are what? Stop order bears are not making money. Good job, Andrew. Andrew got it. So when stop order traders are not making money, what a lot of traders do is this. Let's say they're long. They know it's a trading range, but their thought is, okay, it's a trading range, but maybe it'll become a small pullback rally. Therefore, I'm going to put a stop, a measure move down of a signal bar. And that's one method. So maybe something like this, maybe a little bit further. And when it pulls back and goes to a new high, they do the same thing. Bear bar here. Instead of exiting below 51, I'm going to put a stop, maybe a measure move down. Bear bar here. Instead of exiting below the bar, I'll put a stop, a measure move down. Now, the problem here is the issue for the bulls is what happened on the open from bars 4 to 17. That's a strong enough sell-off that this is probably going to lead to a trading range. The other problem that the bears have, the other problem that the bulls have, is that the bears are making money above bars. Bears sell below 51, entry price 17 even. Look at the low of this bar, 17 and a quarter. It didn't quite reach the low of 51, but it got fairly close. Look what happened. Sells off, traders start buying. So the one danger for the bears is their inability to make money below bars. That adds risk that we get an upside breakout. I did not get an end of day recording for Wednesday or Thursday this week, so I will try and find some time over the weekend to record those. I'll probably just record it and then put it on the YouTube channel, the Brooks Trading Course. But I will try and get that done. Always in long, will this be the moment where the bulls get the upside breakout? Now, one thing to consider, open of the day. Whenever the market rallies for similar to this, bars 1, 2, and 3, and then you get a sell climax like this, there's added risk that we rally back to the open. So part of my concern here is I think we very well might get a buy vacuum test to the open of the day. Remember, it's the final day of the week, and Fridays can often get bigger moves than what you think is reasonable. As crazy as it sounds, it was reasonable to buy the open. It was reasonable to buy the low of 1, and they got trapped during bar 6. So bar 6, they have limit orders to buy the open, buy the low of 1. They get trapped on 6, and they never had a chance to get out break even. That will increase the probability that we get up there. But look at this current bar that just closed. Why did it sell off in the final seconds of the bar? It sold off in the final seconds of the bar because traders are not confident that the bulls are clearly in control. And if the bulls are not clearly in control, then they might be buying high. Now, the problem here is a small pullback rally. So it's basically a small pullback trend. And you don't have to call it a small pullback trend. Obviously, we're getting high. This is a trading range day. But this rally is tight enough that a lot of bears are going to be disinterested in selling below bars. which adds to the risk of an upside breakout. Good bar for the bulls. So we may have some bulls buying above it. Obviously, we're always in long and small pullback trend. Probably going to go at least a little bit higher. I'm going to turn the screen off. Sometimes if I can't make up my mind, I buy a small position at the market, just in case the market continues to rally. I'm going to turn the screen off and pull up the encyclopedia and take a look at it. So if I can't make up my mind, I buy a small position at the market, just in case the market continues to rally. I'm going to turn the screen off and pull up the encyclopedia and take a look at it. I'll turn the screen on in just a second. I am long, taking a chance to see if we get the upside breakout. So here's a gap up, sell climax, and reversal up. Sell climax, double bottom, reversal up. You call it a higher low, major trend reversal. Not quite today. We may do something similar to this, although it's not the same pattern, but rally, sell climax, reversal up. Here, similar, but more buying pressure on the way down. So it's more of a sell climax, but a similar structure to today. Bull bars, sell climax, another 2 or 3 legs down. Whenever you get bull bars on the open like this, closing on their highs, it increases the probability that we'll have a trading range day. And here, it's a little, again, different. The sell-off is larger today. We had a rally and a double bottom. but I think we're going to try and get up to the open of the day. Still collecting bull bars, and overlapping, but a small pullback rally. So chances are first reversal down probably will fail. Really difficult to hold long here when the market is getting a lot of overlapping bars. But it's important to realize this is the market you have. 30-minute chart, a lot of bull bars. So even though there's a lot of overlap, the bulls are winning in terms of time, and that increases the probability that we're going to continue to go a little bit higher. Still always in long, and we haven't had a bear bar since 51. So obviously a sign of strong buying, but overlapping bars, that's a sign of a weaker breakout. It's a channel, but tight channels or breakouts on higher time frames. Again, open of the day, I think, is the target. Well, just as I said that the market is always in long and going to the open of the day, the market thinks different. So what do you think here? A lot of bulls, what do? They started exiting below 58. Now, why would they exit below 58? They're exiting below 58 because they agree that the market's in a trading range and is probably going to go mostly sideways. So what about selling the close of 59 if it's a bear bar closing on its low? 59 is a little bit of a surprise, but you got to realize it's following a lot of bull bars on a higher time frame chart, like a 15-minute chart. So it's a rally and a trend line break. Trend line breaks usually get retest of the highs. Therefore, I think we're probably going to go mostly sideways here. This is enough damage to make me think that the upside's limited. So if I'm a bull, let's say I bought the low, let's say I was long on 57. What would I do here with 58 and 59? What do you think I would do? If I bought and scaled in lower, guess what? I'm probably interested in getting out around break even or with a small profit. But that is not what you want to see if you're a bull hoping for a rally back up to the open of the day. And that makes me think that the upside is going to be limited. We can still get to the open of the day, but this sell-off is big enough that there's probably bears looking to scale in higher. I was long, I scaled in lower, but I'm disappointed. I wanted the market to go straight up. And because I'm disappointed, I'm more reluctant to hold on to trades now. The market cycle has changed. We're in a channel, but instead of getting a stronger breakout, we sold off sharply to the downside, and that increases the probability that the market goes more sideways here. Enough of a surprise, we may get a small second leg down, but I suspect there's buyers not far below. You can see some bulls who bought the 58 low, disappointed with 59, and they're scaling in lower. And what do you think they're going to do at the 58 low? They're probably going to look to buy back some of their long, or sell out of some of their longs. But I suspect we'll get a small second leg up. I just don't know how many traders are going to be thrilled about buying above 59, a big bear bar. Because the market's always in long, I'm reluctant to be selling up here. It's really easy when you're long during 54 or 57. It's easy to look at 59 and panic. And usually that's the worst thing you can do. At 59 and panic. And usually that's the worst thing you can do. It's really common when you have a tight channel that looks like a trading range to get big bars, and then the market starts to go sideways. Breakout pullback sell below 60, so it's basically a low one. But I suspect there's probably more buyers below than sellers, and we'll probably go more sideways. So look what happened. Traders were disappointed by the sell-off, and a lot of those bulls started selling out of longs on any pullback, and that's what led to the second leg down. Now, what about selling right here? Well, as far as selling goes, I would first wait and see how this bar closes. I suspect it's strong enough that we'll probably get at least a small second leg down. It's enough of a surprise that I suspect the bulls are even more disappointed. But look where you are. And so why am I saying I'd wait? I'd want to see the close at a minimum. Well, I want to see how much the bar moves up and down. Look at this bounce. Does this look like the start of a strong sell-off? Or when you see this pullback, do you say, wait a minute, the bulls who bought below 59 and scaled in lower are making money. And the bulls that bought below 60 and scaled in lower, it looks like they're going to make money. And because of that, if I'm going to sell a breakout, I want to see traders trapped. And right here, if the market is not, if it pulls back too much, that will increase the probability that the market goes more sideways. Okay, decent close, but a tail below the bar. We'll probably get a second leg down, but the market may pull back first. Certainly disappointing for the bulls. The bears, they have a breakout below the moving average with the big bar on 61. They need follow through. Give me one moment. I think we're probably going to be sideways here. So I think the downside is limited. May get a small second leg down, but probably a leg in a trading range. So probably sideways here. Strong enough breakout, 61, second leg down likely. But let's see what kind of follow through the bears can get, 64 and 65. Trying to trend down, but a lot of overlapping bars. Probably forming a wedge. I think the odds are we're probably going to bounce for a couple of legs. We're not quite always in short, and for the market to go a lot lower, I suspect the bears need to do more. Obviously, full leg in a trading range, big bear bar, 59. It got a second leg down, and it led to a spike in channel, but probably going to go mostly sideways here. 69, a bull bar. If 70 closes on its high, I think it's reasonable for bears to exit above the bar. Not a great buy, but spike channel. It's a tight bear channel, and the bears may still get a downside breakout, but still looks like a leg in a trading range. It's possible the bears get a second leg, leg one, pause, leg two, but overall, probably going to go mostly sideways here. Bears unable to get, bulls unable to get a bull bar, and the bears trying to get a downside breakout. Still always in short, and this might be a bear breakout of a wedge. Tight bear channel, I suspect probably buyers not far below. So I'm really not all that eager to be selling down here. So as far as buying, what do you do here? I think it's better to wait and see a reversal up. If the bulls start to get a reversal, maybe a bull bar closing on its high, that might entice more traders to buy. But they've got to undo this. Channel down. You can see testing the bottom of the channel, but fairly tight channel. Whenever you get a tight channel, there's added risk of a downside breakout. Bear breakout, but immediate reversal, a reminder that the market is in a trading range. I've got to end the webinar at a little before, right at 3:30, maybe a few minutes before. So I'm going to start the end of the day review here in about 10 minutes so I can make sure to answer plenty of questions and get through it. So again, I'll probably start talking again here in just about 10 minutes. I think we're probably just going to go sideways for the rest of the day. This was my concern. Bears trying to get a breakout on 71, and they didn't have the energy, and now they're failing. And that's why 72 is reversing up. That's really common in trading ranges. You think the market's bearish, like 70, 71, and it looks like it's going to try and break to the downside, and then it reverses. Continued disappointment. The bulls, they got a second leg up with 72 and 73. Whenever you get a breakout like 72 and 73, and you look to the left and it's overlapping a lot of bars, it's really common for the breakout to get a second leg. But before you get the second leg, you get a very deep pullback like 75. Middle of a tight trading range. Probably going to continue to go sideways for the rest of the session. Overall, on the daily chart, you can see we're going sideways right around the high of December 28th down here. I think we're probably going to get a second leg up and test up to the March 2022 high. We're in a trading range, and we're probably going to continue to go mostly sideways. Weekly chart, we closed with a bigger tail, but above the high of last week, so that's good for the bulls. But overall, I think we're probably going to go mostly sideways. So next week, I don't think it'll go straight up. I suspect we may have to pull back, but big enough bar, probably buyers around the midpoint of the bar. Today, the market gapped up, but it was a bull breakout of a bull channel, and we gapped up right at the high of the prior day. Bars 1 and 2, strong enough for at least a small second leg, but with the gap up and at the high of the prior day, chances are the market's going to go more sideways up here than straight up or getting a strong upside breakout. Bar 3, doji, probably buyers below for at least a small second leg, but tail on 1, tail on 2, tail on 3, that will limit the amount of traders buying up here. 4, close on the low. You can see some bears. A lot of the bulls who bought below 3, when they see 4, they'll probably try and get out break even. 4, they'll probably try to get out break even at 3 low. And you can see 5 went a little bit above 3 and turned down. Bar 5, consecutive bear bars, tight trading range, probably buyers below scaling in lower, but we have a magnet below the breakout point of bar 86 or bar 78, tight trading range. We could easily get a downside breakout testing the moving average, and that's what happened on bar 6. 6, strong enough bar, probably always in short, and at least a small second leg down. But always in short does not mean bear trend. It just means that a second leg in that direction is likely. Bar 7, follow through selling. You can see good selling on the open of 6 or the open of 7, but bad close of 7. Close at the midpoint increases the probability that the market pulls back. 8, bull bar, but after 4 consecutive bear bars, all closing on their midpoints in a micro channel, probably sellers above 7 scaling and higher, and that's what led to 9 getting a second leg down. 9, tight trading range with the past 3 bars. There might be buyers below, but if there are, I suspect it's minor. Strong enough sell-off will probably get at least a small second leg down. That's more symmetrical. So the range of bar 4 to the low of 7 will probably get a second leg down, at least 50% of that first leg. Bulls, some bulls bought the close of or bought during 8 and scaled in lower, and you can see they're trying to get out around break even after 10. Some bears, they're selling the midpoint because they know that's a 50% pullback of 9 and the break even price for the bulls. 10 follow through selling, probably going to go at least a little bit lower. And then 11, instead we got a bull bar. For the bulls, what about buying above? You can, arguing parabolic wedge, 1, 7, and 10. But if I'm buying above a bar like 11, an inside bar in a very tight channel, I'm going to be really quick to get out. And if I see a bar like 12, breakout on a 1-minute chart, the market rallied, strong breakout 11, deep pullback 12, I'm going to be pretty quick to get out around the high close of bar 11, especially when you see 12, and that's why 13 rallied and pulled back. 14 sold off, so it's 2 legs up. Rally on 11, pull back 12, second leg 13, and then a bear breakout 14. 14, maybe a surprise, may get a second leg down, but I suspect traders buying and scaling in lower. My only concern here is what I said earlier. We may get some kind of second leg that's more symmetrical than just 9 and 10. 15 sold off further, but pulled back. Bad signal bar on the 13, so bulls bought, scaled in lower, making money. 15 sellers above. It looks like a lot of bulls who bought here and scaled in lower were disappointed, and they used 15 to sell right at the breakout point, and the bears did the same thing. And that's why 16 looks the way it does. Why not sell below 16? Well, look what happened during 14 and during 10. Traders are buying in this price level, not selling. 17, bear bar, consecutive bear bars, probably going to go at least a little bit lower. But as I said earlier, every time we get to a new low, the market pulls back for a bar or two. And I suspect the same thing on 17. 18, bull bar. You can argue a wedge, 1, 2, 3, and a little bit of a nested wedge on the third. So we sold off on 14, pulled back. So we sold off 14 to 15, pulled back 15. No, back up. We sold off here on 12, pulled back, sold off more 15, pulled back, sold off more 17, and now we're turning up. You can also call it a wedge, 1, 2, 3. I think it's okay to exit shorts above 18. We may get a couple of legs sideways swap. 19, follow through, a little bit of a pullback on the low of 19, but consecutive bull bars, probably going to go at least a little bit higher. And then 20, 3 consecutive bull bars, probably strong enough to transition the market into a trading range. And we may get a small second leg up, but it's not clearly always in short. And because of that, 3 consecutive bull bars, it's top of a trading range. I suspect the follow-through will be disappointing. 21, disappointment. So a reminder, the market's in a trading range. 22, more disappointment, more overlap. The bulls that bought closes. When the market starts to go sideways, they'll be pretty quick to get out. 23, breakout below 22. Probably going to get at least a small second leg up, but I suspect the second leg will be rather disappointing, and that's what happened on 24. 24, high one, 23, high one buy, but probably sellers above. 24, it's a bull bar, but it's a big tail, so it's part of this tight trading range. In this tight trading range, if the bulls continue to get follow through, then chances are the market will pull back, and that's what happened on 26. 26, big enough, strong enough surprise, second leg down likely. 27, inside bar, probably going to get at least a small second leg, but we may have a deep pullback of bar 26. The market sold off on 26, pulled back intra-bar. That's why there's a tail on 26, and then when 27 sold off and pulled back, it's a micro double bottom. So we could bounce somewhere up here. But I suspect the size of 26 is big enough that we'll probably have to test the low of 26. Buyers below 27, probably a low 1. And you can see bulls bought and some scalped out during this bar or this bar. But I suspect more sideways is likely. 30, bad follow through, probably buyers below scaling and lower. 31, we triggered the sell below 26 and found buyers on 32. And then 33, we triggered above the micro channel, but this looks like a trading range, and it could easily break out to the upside and test up to the 24, 25 low or the 25 high. 3 consecutive bull bars, 32, 33, 34, but tail, and another tail. Limits increases the probability that whatever rally we get will be a trading range. Bear bar, 35, but probably buyers below. But you can see the buyers didn't come in until about a measured move down on the bar. So bears sold, and then they scalped out, and the bulls started buying. 36 bull bar, but forcing traders to buy in the middle of a tight trading range. Probably limited upside. Doji, 37, probably sellers above, and that's why 38 went down a little bit. 37, probably buyers below, and that's why it went up on 39. 39, double bottom, you can call it a wedge. You can call it a triangle here. It's an okay swing buy, but it's a low probability buy. You call it a higher low major trend reversal, bear trend, trend line break to a double bottom, and we may get a second leg up. But overall, I think the upside's probably going to be limited. The bulls, they need to break far above the moving average. Otherwise, traders will assume that that whatever breakout we get will be limited. And then we got a surprise on 41. It was strong enough to lead to a second leg, but traders wanted to see the follow through. Tight trading range, you can call it a triangle. Bull breakout of the triangle, but 50-50 chance it fails. And instead of getting follow through, we got a bear bar on 42. 42 is a deep enough pullback. You can call it a wedge, 27, 35, 42. It's a deep enough pullback that it limited the upside. So instead of the bulls getting a strong breakout, it led to a fairly tight channel. 43, bull bar, retest to the 41 close, high one buy. There might be sellers above, but 41 is a surprise. It'll probably get at least some brief second leg. In other words, it's reasonable to assume that the market may have to get some kind of leg one pullback, leg two. 45, 3 consecutive bull bars, probably buyers below in more sideways trading. And then eventually the bulls just kept trending up in a small pullback rally. As strong as the rally is, breaking out to the upside here, 54, 55, it's strong, it's tight, but there's a lot of overlapping bars. And chances are these gaps are going to close. Look to the left. We had a big bear breakout in a trading range, and we're near the upper portion of the range. 54, 55 trying to break out to the upside. 56 trying to break out to the upside, but not all that strong of bars. And then obviously 57, 58, and then 59, we got a strong bear breakout. So it became more and more parabolic to the upside and tested the high close of bar 8 right here. Strong bear breakout, 59. A little bit of a surprise, probably going to get a second leg down. The bulls that bought below 57 or 58 and scaled in, a lot of those bulls are so disappointed that they bought scaled in. They'll look to get out around break even on their first entry. And you can see what happened on 60. The low of 58 is 21.5 and the high of 60 is 21.25. So the market came within one tick of the 58 low and then turned down. 61, low one, but probably buyers below, but we may have to test down to the 60, the 59 low before the bulls come in. 61, surprise breakout, probably going to go at least a little bit lower, but we'll probably pull back to the 60 low and allow those bulls out. Reversal up on 62, tail below 61, tail below 62. I suspect we're in a trading range and bulls will buy and scale in lower. But as far as buying above 62, it's a micro channel and there's probably sellers above. 63, breakout pullback sell, but tails below 61, 62, and tail on 63, I suspect buyers below scaling in lower. 64, triggered the sell and reversed up. The market will probably bounce. The trading ranges often go further than where you think they'll go, and we may have to fall somewhere down below 41, bottom of this bull breakout bar. We triggered the buy above 64 and tested the high of 62. Bulls bought 62 high, scaled in lower, getting out break even. For the bears, it's a two-legged pullback, and they broke out below 66, but it looks like a leg in a trading range. And then here, the bears, they're getting consecutive bear bars, but the bears have too much overlap, and that will limit the downside potential. And then the bears tried to get a bear breakout of a bear channel. You can call it a wedge. They tried to get a bear breakout on 70 and 71, and then immediately as 71 closed and 72 opened, the market reversed up. Strong enough surprise, probably a second leg up likely here. But as strong as the bull bars are, it's testing the high of the channel, spike, pullback channel, testing the top of this trading range right here. There's probably more sellers up here than buyers, and I suspect some of the bulls who bought anywhere here and lower are probably going to use this to get out break even. But 62 and 63, 72 and 73 are strong enough for a second leg up. 74, bear bar, but probably buyers below. And then 75, you can see what happened. We tested near the low of 72, which is pretty much a 50% pullback of 71 to the 73 high. It's about 50%, and you can see there's 50%. Then we got a second leg up, and then we went sideways into the close. For stop entries, I thought it was no okay sell above. Buying above one's aggressive. Some traders will, but I would not. I think you can sell below 4, or you can sell below 5, or you can sell below 6. If you sell below 6, climactic bar, and therefore it's reasonable to buy the close of 6 and scale in lower. And that's why 7 retested. That's why 8 retested the close of 6. Other traders, instead of selling below 6, wait for follow through on 7 and then sell the close of 6, because they know that bulls will buy, betting on exhaustion or climax and a pullback. And when they get trapped on 7, a lot of those bulls scale in and they try to get out break even on 6. Probably sellers above. And as far as stop entries down here, if you buy above 11, I mentioned that it's probably minor, and I'd be pretty quick to get out after bad follow through on 12 and 13. You can see if you bought above 11, your entry price is $6.75. The high of this bar right here, your entry price is $6.75, and the high of this bar is $7.75. So traders, that makes way more sense. There we go. Yeah, never mind. So if you bought above this bar, the market went up 1 point here, and a lot more traders exit. I thought you could buy above 18, but if you do, you got to get out somewhere in here. And then where do you sell? I would not. And as far as buying, I think it's really tough to buy anywhere in here. You can buy above 39, maybe stop below 36 or 38, but it's a triangle, and you're entering early, hoping to catch the big swing. Or you can buy above 43, 41, better to buy above 43, breakout, pullback, buy. And you can buy, in theory, you can buy above any of these bull bars. When you start to get a buy climax here, away from the moving average for a lot of bars, and the bodies are getting smaller, a lot of traders would exit. And then as far as selling, if you're quick, you can sell below 60. But other than that, I think it's really tough to get short down here. And then you can buy above 72, but again, it's buying near the moving average and probably going to lead to a sideways market, which it did. For limit orders, lots of limit orders. Probably sellers above 7. I thought that was a good trade. And probably buyers below 7 during 9 and 10. I thought sellers probably above 12. I thought buyers below 15, buyers below 11 during 15, and buyers below 15 during bar 17. Probably buyers below 22, but at the moving average, got to be quick. There's probably sellers above 23, but possible wedge 1, 2, 3. So I can understand not selling above that. Probably buyers below 27, buyers below 30, probably sellers above 36, buyers below 37, probably buyers below 45, buyers below 51, but not easy to do, top of the trading range. And then probably you can argue sellers above any of these bars, but tough to sell when it looks like a leg in a trading range. Buy the close, sell the close. I thought sell the close 6, sell the close 7 if you can scale in. Selling 7 is it's really better to sell a pullback because of the tail below 7. And then bar 8 is probably more sell the close than buy the close. And then really tough to sell closes here. By the time it's clearly bearish, it reverses. Clearly bearish, it reverses. And then as far as buy the close on 20 is really tough. It's under, bulls, they're buying a lot of bulls. They see 18 and they see follow through on 19. They know that there's trapped bears, and the bears who sold above 18 and more higher, they're going to be more desperate to get out at the high of 18 if 20 starts to pull back. And you can see what 20 did. It tested the high of 18 and immediately reversed up. So the buy was really more on a pullback. So buying up here is buying a buy vacuum at the moving average, which may lead more to sideways trading. And then maybe sell the close 26 if you're quick to make decisions. You can buy up here, but pretty tough. and then again, you can sell the close. If you understand the logic, it's okay to sell below 60 or the close of 60. A strong enough bear breakout, second leg down likely. But again, you got to be really quick to make those decisions. Tough to sell 61, especially on the tail. And that's probably it for buy the close, sell the close. Instead of traders buying the close of 73, they buy a pullback because it's in a trading range. Let me take a look at a couple of questions. Someone asked if I could go over stops on this long trade. Yeah, I bought a pretty small position here, somewhere in here. And I don't remember exactly what I did. I don't remember where I got in, but I bought. And then when this bar went down, I had a pretty, what stop did I have? I don't know. It was somewhere down here. And when the bar went down quickly, it went down pretty suddenly. And my initial thought was, I thought the chances were low that it would just go straight down and get follow through. So as the bar went down, I ended up scaling in 1 or 2 times lower and then pretty much getting out a little better than break even around this close. So I bought, scaled in once or twice, can't really remember, and then got out somewhere over here. And when did it become always in long? I thought it was always in long with 41, but in a channel, especially when the channel's in a trading range, it's going to make the market typically makes it really difficult to get in. So even though it's always in long here, it's hard to buy. Therefore, a lot of traders look to buy pullbacks. They buy and scale in, or they buy small and sometimes add. A lot of times what I'll do is if I'm long, I'll scale in and get out break even back at the 41 close, or I'll buy during 42. Can you touch on why bar 62 was not a strong signal or reversal bar? Yeah, so the problem with 62 is 62 is following a surprise. And while it's a reversal, it's mostly a trading range bar. So if you think about the bar of 62, 62 went all the way down here and then reversed up. And if you think about that logic, that means that 62, it went more down than it did up. From the open, it only went up here. So it went up about a third or a fourth of the bar compared to going, it went up maybe less than a third of as much as it went down. Okay, question. I sold the close of 17 right here. Sold the close of 17 for a quick 2 to 3 point scalp, stop above bar 16. So I sold here, going for 2 to 3 points, stop up here. Yeah, if I wanted to scale in, where should I scale in? My only problem with that is you're selling after a wedge. 1, 2, 3. So one of these reversals is going to be successful, and the market sees this whole thing as a trading range. So you get a sell-off reversal, sell-off reversal, sell-off reversal, sell-off, big bear bars, but look what's happened at every new low. There's buyers below every new low. So that means the chances are if we get a reversal up here, there's a greater risk that if you do get a reversal like this, a lot of traders will exit. For me, had I sold the close of 17, especially later in a channel, and I get a bull bar closing on its high, especially if it reversed, most of the bar, I'm just going to get out above 18 and take the loss. I know you could have scaled in and then gotten out break even here, but the problem with that is if I sell and I put a stop above 16, where do you think the market's going to go? It's really common for the market to run stops. And if you're stopped right here, look what happened. You sold 17 here, you put a stop above 16 here, and then the market went above it a little bit and then immediately turned down. And the reason that happens is traders know this. Traders know this is a minor reversal. They know this is a minor reversal here. So traders will sell 17 and they'll sell more at the swing point, the minor, you can call it the minor pivot point or reverse or lower high if you want to call it that. They'll sell and scale in, betting that the market will allow them out break even. Okay, so that's all the time I've got for questions, unfortunately. As far as Monday goes, Monday's a holiday, so obviously no trading that day, but it'll be interesting to see what happens next week. I think we're going to get up to this blue line, the March 2022 high. We may have to go sideways for more bars, but I do think we'll get up there. All right, thanks everybody for tuning in, and I hope everyone has a great weekend.